Namaste. Good morning. A session to complete almost all the assessment procedures, all the things except the faceless. Yesterday's disruption of power was rectified very late, and I thought if I can realign my appointments, I will have a yesterday evening class. But I was unable to realign. I had to attend to some works, so I couldn't. Whatever we lost yesterday, I am trying to make good today evening by having one extra session for 2.5 to 3 hours maximum. 2.5 to 3 hours maximum. That session will be more for practical aspects. Hopefully, we should be able to do it today. I will anyhow get your concerns accordingly. I will be going ahead. As of today, our intention is except the faceless aspects, all part of the assessments should get over. Let's get good. When we were winding up, or when the power went off yesterday, we were in the survey assessment. So I am starting from search and seizure and progressing forward, just as a recollection. Here we are not only speaking about the assessment, we are also speaking about the process. We first cover the process, then go for assessment. We have so far completed first level of assessment, which is popularly known as scrutiny assessment under 143.3. The notice for that in 143.2. The second level assessment is when there is an income escaping assessment. When some income has not been assessed or failed to be assessed, or it is an assessment or reassessment process under section 147, the notice under 148 and other things follow that. There was when we studied our first level assessment, we also studied about best judgment assessment, which is for all the three assessments where the assessee fails to cooperate. We saw the process of assessments which are there in section 142. Today we start with the process of search and seizure and then move on to assessment of search and seizure. Before search and seizure itself, there is a section 131. There is a section in law, section 131, which gives income tax authority the powers vested to a police official, or normally a power vested under the civil court procedure. A revenue law cannot have such powers. It is not there in 143, 147, etc. It is there in 131, where I can summon a person. There is a difference between issue of notice and issue of summons. Issue of notice, that person or his authorized representative can appear. Issue of summon, only that person can appear. Only that person can appear, like this. Okay, where the powers are going to be wide. The powers will say, I am going to enforce the attendance of a person. I will issue summon, I will issue commission, I will impound in my custody some of the assets or belongings of the assessee, like that. The powers are going to be not just under income tax law, but the powers are going to be very wide under section 131. What are all those? Assessing officer or any officials above the assessing officer. Okay, I want to take this opportunity to go to a particular place where I have listed the authorities of income tax law. We all know that the superior authority or the superior body is Central Board of Direct Taxation. And in income tax, there are two wings: administrative wing, investigation wing. Administrative wing, investigation. Investigation wing is not doing the regular jobs. They are only conducting what I would say inquiries and enquiries to just understand whether an assessee is not paying taxes. If you remember Sky Hospitality, a case which we saw, the investigation department gives a tax evasion report. Can that be the basis of opening up a case or reopening a case under 147? The answer is yes. That is a sufficient proof. So investigation wing is more as an agency which critically evaluates, whereas administrative wing is involved in regular activity. So the investigative wings will be using the terminology director and the administrative wing will be using the terminology commissioner. It is only the terminology, the powers are almost the same. Okay? If there is a principal commissioner, there will be a principal director. So you can understand. So the administrative wing uses the terminology commissioner, the investigation wing uses the terminology director. The superior person, the chief executive officer, is principal commissioner here, principal director there, followed by CCIT, DGIT. Okay, okay. Then principal commissioner, this is chief commissioner. Please remember, this is chief commissioners. Okay. Then principal commissioner, principal director, commissioner, director. Additional ACIT and JCIT. Okay. You remember yesterday I was telling you JCIT can call for and okay. He cannot call for something with the commissioner or principal commissioner because they are superior authority. He can call for any of his junior authorities doing it. Okay. So additional director, joint director, and ACIT, DCIT also. Okay. Up to this, we call them as assessing officers. Up to this income tax officer, all these people are assessing officers. Income tax officer is an assessing officer. ACIT, JCIT are assessing officer. Commissioner of income tax is also an assessing officer. The later part we are going to study 263 and all, you will be clear. They are also assessing officers. They are assessing officers. So, any assessing officer and or the officer above him. Okay. The law says assessing officer or anybody above them shall have the powers which are normally available only to a civil authority. Okay. Those who are exercisable by court, police officials, etc. Discovery and inspection, that is for the investigation wing, director, PGIT, okay, for them. Summoning, enforcing the attendance of a person, taking any statement by him which will be examining him on oath. In court and all, they examine a person on oath like that. Asking him, not seeking, but compelling him to produce books and documents and issuing commissions. Okay, so these are powers which are very vast. And can they exercise this power even when an assessment is not pending, or is it only at the time of assessment I should say, give your books, ask a person to come? Normally, yes, at the time of assessment only, but the law wants to safeguard, even when an assessment is not there, these powers can be exercised. Even when an assessment is not there, some information is there, these powers can be exercised. And normally seeking information from another country should be at the ministerial levels, but here for facilitating quick assessment, my ROR is there, he says he is owning an asset outside India. From that official I should get the information. What about that asset? Can you give me the ownership, the registration? For facilitating quick assessment, law has vested these officials to collect information from about an assessee, obviously about ROR majority of the time, from any source outside India. Income tax of authorities above the level of AD and DD has the power to impound. The income tax officers, that is assessing officers, doesn't have the power. Top officials has the power to retain in their custody the books, documents, etc. One power income tax never gives its officers, wherever it is, search, seizure, everything is impounding or taking custody of stock in trade. Majority of the time, they will not give this, 100% they will not give this power. GST or other laws, confiscation of goods is an inherent power. But under our law, goods cannot be confiscated. Tomorrow morning, if the raid or any other process, okay, next day morning, let him do business. You take inventory of goods, that is sufficient. You cannot stop him. After this entire process was over, tomorrow morning he can start doing his business. So never in income tax you will see, which is a very nice provision, that stock in trade cannot be seized. So even here they will impound, retain books of accounts, documents. Remember, law is written when it was manual system of accounting. Today impounding means taking a copy of the software, be it Tally or be it QuickBooks or be it any of the ERP, they take a copy. From tomorrow they can continue recording in that. Okay, today this is not okay, in today's environment you will not feel what is there. But when the law was written, it was manual writing of books of accounts. So they will take the books of accounts, which will lead to a time lag. That's why this books of account impending today, you will not find it very big. You will have to slightly travel back in time and understand that this was a bigger power. Okay. Retention is possible only if reasons are recorded in writing. Okay. That is the aspect. Now I go into the next process. Okay, 132. We are going to study 132, 132A. Then the assessment 153A, 153B, 153C. Then study 132B. Actually, 132 has 3 sections. 132, 132A, 132B, which are all twined up, which are all same. But better understanding, in my opinion, is we will study 132, 132A assessments, and then study 132B. You will be able to appreciate. That's why I'm clubbing these things and reading. I have not gone in the order in which law has gone. 132, search and seizure, which is a bigger power. I am the constitutional promise to every citizen is freedom of movement, freedom of expression, that is speech or writing, etc. I'm going to stop. I'm going to stop that. I'm going to put a hold on his neck saying you cannot move, you cannot express during this period. This is the raid period, search period. So it's a very huge power the law is having. A constitutional right of yours is going to be stopped by me, which cannot be exercised just like that. Lot of layers should be built in, then only it's a good system. Okay, so a constitutional power of a person is going to be stopped by an income tax authority. Powers which are vested in the civil court only, these are. Police persons can say you should not move. Okay, a police official can say that you cannot move because he has the power. That is, the civil law gives him the power. This is the revenue law. Where from revenue law is going to get this power? No, I will get the power from the civil law. That is, what is that? Rest of it, after you become CA, we will discuss whether this power is correct, how, etc. Right, coming back. What is this exactly this power is going to do? It is going to search. Search means enter a place and take control of the place, look for information, documents and other things in that place. Seize. Seize means take it into your custody. Search, seizure. When will the income tax, first listen, then we will read it also. When will this power be given to an income tax department or income tax official? When the authorities feel that this person is not fully disclosing his income. This person, this assessee is not cooperating, and then goes to the wonderful level of perception. It is not only substantiation, it is also a perception. This person, for example, the income tax authority feels Rishabh is in possession of money, bullion, jewelry or any assets which he has not disclosed, and if I normally call him and ask, he will not disclose also. Part A, which he has not disclosed, statement of fact. Part B, an assumption. If I call him and ask, he will not disclose also, because he has been a non-cooperative person. To whom I send a notice under 142. What is 142 notice? Asking you to file your return, asking you to produce books of accounts and documents, asking you to write and give whatever you want to say. To whom I send a notice under 142 is not responding, statement of fact. Even if I send a notice to him, he will not respond, assumption. in that case, where the department has reason to believe, I should write and give what is the reason I am going for a search. Substantial evidence should be there in my hand that that person is a non-cooperating person, or that the person has lot of assets. Okay, and I need not give the reason to the assessee. Later the court can examine the reason. But where the department has reason to believe, it will go for a search, and it will appoint one person to be the leader till the process is over. That person is known as authorized officer. That person who leads the search is known as authorized officer. Okay, authorized officer. Search is not one day process, my dear friends. Search is a series of events. I go to a place, from there I get information. Take the popular stores of Chennai. From there I go to some persons. From there I get to persons. Okay, right? First day is known as initiation of search. Okay, okay. Completion day is known as last day of search. And you cannot just like that go and search. Okay, you all have seen special 26. Okay, you cannot go just like that go and search. You need to have authority. So, okay, authorization for initiation of search. This is known as last of the authorization for search. Okay, this last of the authorization is little important because from the all the dates will be computed using this particular day only, last of the authorization. So I start the search. I need to search one more place. I will get the authorization, go for that place, from there that place, etc. Last of the authorization of search is very important. If there is no last authorization, initial and last will become the same. Okay, so that person who goes for the search is known as authorized officer. He has wide power. Again, you should think yourself like a policeman and see. I can break open locks. Any ship, vessel, that is ship, aircraft, vehicles, I can stop. Okay, I can go and check bank lockers. I can take all these things and I can search the entire places. After the search is over, the authorized officer takes it in his possession. The authorized officer takes it in his possession. That is known as seizure. That is known as seize the asset. Get the asset. There are three types of seizures, my dear friends. There are three types of seizure. One, physical seizure. Take it and bring it to the office. Books of accounts, documents, these things they will do physical seizure. Suppose they find lot of jewelry, money, or any other the bigger documents, etc. To bring it and keep it in the office might not be safe. So constructive seizure, it will be put in a room in the assessee's premises or business or residential premises. I will put them all in a room, lock that room and seal it. It is known as constructive seizure. You cannot open that without my permission. Third is stay order, order of restraint for bank account. For bank account balances, etc., stay order will be obtained. Okay, the authorized officer will collect all the information and then give the information to the assessing officer. Hereafter, you do the assessment. My job is over. So, authorized officer takes control from the first day, initiation of search, till handing over everything to the assessing officer. After that, his power is the procedure shift to the normal assessment wing. So the person who can seize is the top authorities. Okay, okay, right? Top authorities. I mean, search and who can order for it. When search can be authorized. When can search? A person to whom summons. You just saw what is a summon. Okay, asking him to come, taking him on oath, asking him compelling books of accounts and document, or a notice under 142. He returned books of accounts was issued but fails to produce. A person to whom summon or notice has been statement of fact, might be statement of assumption, okay, has been issued or might be issued but does not statement of fact, or will not statement of assumption, would not produce books, document, or other information, or a person who is in possession of money, bullion, jewelry, or other valuable article which has not been disclosed, statement of fact, or will not be disclosed, the assumption on the concerned authority. In these cases, you can order a search. The reason need not be produced to the assessee. It is not like 148, 147 reopening of case. You should give the assessee what reason what is the new thing that has come into where income is escaping assessment. Here, reason need not be produced to the assessee. However, the court can call for later when the case goes up to high court, it can. Who conducts the process is known as an authorized officer. One of the person involved in the search process will be appointed as the lead, who is nothing but the authorized officer. What are all his powers? To enter any building, ship, aircraft, or any other place where he is of the opinion that assessee has secreted, that assessee has kept the money, bullion, jewelry, or other valuable article. Break open any locks where the assessee fails to give the key. Okay, right? Take possession of any hard disk where the assessee is not giving the password. Okay, take the computer, take the CPU itself in come. Take possession of any books and documents which are found there, and search any person who is in the premises or who is about to get in or get out. Okay, of that, these are all the powers. What is that? After search he will do seize. Seizure means taking possession of. Physical seizure, take physical possession of books, documents, money, jewelry, etc. Constructive seizure, this is what is popular. They don't take books, documents, they seize, they take possession. Constructing, goods or books or documents are not physically taken, but assessee is not allowed from transacting the same. Order of restraint, stay order for balances in the bank account, this will be useful. However, seizure provisions are not applicable for stock in trade. Remember, I told you from tomorrow morning it cannot be stopped. Then you can examine after the search is over. You can ask the person to give a statement, and that statement will be used in assessment. That statement will be used in assessment. Okay. Now, I am the authorized officer is conducting the search, and the assessee says, this books doesn't belong to me at all. Who? This asset doesn't belong to me at all. The neighbor was going for America. They asked me to keep this asset. This bag does not belong to me at all. These things you prove in assessment. These things you prove in assessment. As far as the authorized officer is concerned, rebuttable perception. As far as the authorized officer is concerned, section 292C, sir, 292C, we yesterday studied 292B. Small defects in the notice can be ignored. 292BB, where the notice is time barred, but the assessee started cooperating, then the assessee has condoned the time bar notice and no more the assessee can contend. However, in Maruti Suzuki case, the contention is not about time bar. The contention is about you have issued the notice against the person who is not in existence in spite of knowing that that person is not in existence. Okay, right. 292C, perception. Whatever has been found in possession of the person in the search belongs to that person. That is one of the perception I take. If it doesn't belong to you, I'll tell you in few minutes when we come to assessment. I will believe that the books and documents are true. Sir, I don't know, the accountant passed the wrong entry, sir. I will believe that the books and documents are true and it is the signature of the assessee. What is that we find? Majority of the time, bit notes. Notebook where everything is kept. Books are signed or deemed to be in the handwriting of the assessee. This is my perception. If my perception is wrong, prove it in the assessment. If my perception is wrong, prove it in the assessment. Once all these things are over, okay, I have searched, I have seized, and I'm going to say bye to my process and then gives it to the assessing officer. Authorized officer roles ends here. Okay, authorized officer shall hand over all books, documents, assets that are seized, information that are obtained, and statements that are recorded within 60 days of the last of the authorization of the search is completed. Within 60 days, not from the initiation of the search. The last of the authorization of the search is completed. So, when did the authorization come? When did the search complete? From that date, 60 days. Okay, you can hand over all books, documents, okay, information to the assessing officer. From their own, assessing officer will start. Okay, so I have given you whatever I have written. Okay, the last of the, okay, section 132 is a bigger power. 132A, requisition for books and documents. Sir, 132 we spoke about a very bigger power. Here you are boiling down to requisition. Are you going to plead him for books of account? Not him, assessee. I went on a search and understood day before yesterday CBI has come and taken all things. I understood day before yesterday, GST department has come and taken everything. Some other department has already searched him and taken all the books, documents in his possession. Where books, documents and other assets that are proposed to be searched or seized is already taken possession by some other authority, then you can request them. Then a requisition will be made to hand over them to the assessing officer after completing the process. Please give it to us. Where such requisition is made, they are duty bound to do it. However, in the other law specified stock in trade can be seized, then the same will be handed over. We cannot seize stock in trade. A quick read through before going to the assessment. Okay, okay. Moving on to, okay, wait. Moving on to assessment. Moving on to assessment. The search assessment is popularly known as block assessment. Once more, the search assessment is popularly known as block assessment. The last time we used the word block is at the time when we studied depreciation. Block of assets means assets of similar nature having same rate of depreciation will be grouped together and depreciation will be charged on the group balance. Block means group. Block assessment means group of assessment. The chances of question is very less because next year the number of years changes. There is an amendment in the next year for those who are writing May. There is an amendment, so the chances of question is little less over here, but anyhow. Block assessment. Okay, so block means group. Group of years will be together assessed. Once more, group of year will be together assessed. Block assessment. Okay, so block means group. Assessment will not be for 1 year, it will be for group of years. It will be for more than 1 year. This assessment overrides other assessment because 153A starts with this wordings, my dear friends. 153A starts with this wordings, notwithstanding anything contained, okay, anything contained under 139, 142, 143, 144, 147, notwithstanding anything contained under filing of returns, scrutiny assessment, best judgment, reassessment. Okay, this assessment overrides other assessments, scrutiny, best judgment, reassessment, including filing of returns. Okay, AO shall send notice to the assessee for filing of returns for 6 preceding years. This has been changed to 3 next year. Okay, AO shall send notice to the assessee for filing of returns of 6 preceding years and other relevant years. Can I once more tell you? AO will ask the assessee, we shall send notice to the assessee. Which section I will send notice? 142. I told you that is the process. AO will send notice to the assessee for filing of return of 6 preceding years. So, financial year 2021, the search and seizure happens. So 6 preceding years, they will ask us to file the returns. So for the 6th year, 2014-15, something like that. Sir, in that year, I don't even have income, or my income is less than 2,50,000. I need not file my return. Returns of an individual needs to be filed only if the gross total income before granting exemption under section 54 exceeds the basic exemption limit. Sir, it has not exceeded basic exemption limit, sir. So I am not liable to file. Remember, this section overrides 139. 139 might say that you are supposed to file only if it has exceeded 2,50,000. But this section 153A has overridden 139. Sir, for some year, scrutiny assessment is over, sir, overridden. Sir, for some year, reassessment has been done, overrides. Sir, for some year, scrutiny assessment is in process, tear it off. This section overrides. It starts with assessing officer will issue a notice asking, because authorized officer has handed over to the assessing officer. This is that person's records. So he has so far, for example, I am telling you, he has so far secreted some 40 crores. They find in the assessment process 40 crores of money has been not been disclosed. So secreted. Assessee will say, I earned it only now. Assessing officer will say, no, you earned it 6 years back, because penalty, interest, tax, everything will be more. So first option is you divide and give. In this year I earned so much, this year I earned so much, which I have not disclosed. So file your return for 6 years and other relevant years. I can even go back up to 4 years. So totally 10 years, 6 years mandatory, remaining 4 years optional. I'll come to you when that option will be exercised. You have to understand, I have to send a notice, file your return for 3 years. That is not there. Next year it's different. Okay. I have to send a notice asking him to file returns for 60 years and other relevant years. Other relevant years can be for maximum 4 years preceding that 6 years. Okay. What is that condition? Other relevant years will be taken up if the undisclosed income in 1 year or cumulative of all years exceeds 50 lakhs. Okay. Other relevant years, sir, 11, 12. Okay. 2011, 12, 2010, 11. Okay. 2009, 10. 2008, 9. Suppose these are all the other 4 years. I'm not exactly saying other 4 years. Okay. Each year he has secreted 10 crores. Each year you cannot issue, sir. Each year I have information that the assessee has earned. Okay. 10 lakhs. Each year, I know I have information that the assessee has secreted 10 lakhs. I cannot. In this year alone, he has secreted 60 lakhs. In other years, less than that. Only for this year issue notice. Okay. Other relevant years will be taken up if the undisclosed income in 1 year or cumulative of all years exceeds 50 lakhs. Only 1 year, that year alone I can. That first 6 years I don't have an option. 7, 8, 9, 10 I have an option of issuing for all 4 years, just 1 year, or all 4 years can be ignored. When it will be ignored? When it is less than 50 lakhs. When only 1 year it is more than 50 lakhs, other years are 5 lakhs, 3 lakhs or 0, etc. Issue for that year alone, though cumulatively also, or issue for all the 4 years. Okay. 6 years is mandatory, 4 years is subject that fulfillment of condition. Okay. Where notice under this section is issued, the only response to the notice can be filing return. Assessee mandatorily required to file return, even if the income does not exceed basic exemption limit. All pending assessments and completed assessments will stand cancelled. Will stand cancelled. Sir, 148 over cancelled. 143 over cancelled. Sir, 148 is happening, sir. 147 is, 143 is happening. 147 is happening. That is also cancelled. But later, understand this case, okay, for the financial year 2018-19, 143.3 is happening, that is scrutiny assessment happening. For the financial year 2016-17, okay, 148 is 147 reassessment is happening. These things are cancelled. But later the court said, search itself is wrong. Search itself is wrong and cancelled the search. Now this will again get live. Okay, note. Where 153A is, however, where the later court quashes the 132 proceedings, then the abatement assessment, cancelled assessment will stand revived. Note, 153A is initiated, once initiated is pending or assessment will stand cancelled. Appeal process will not be, that you will withdraw. Okay. AO shall complete the assessment individually for 6 years and other relevant years. Tax will be chargeable in respect of those years. Okay. Okay. How will you complete the assessment? We all know 142. Produce books of account, write and give, special audit, valuation officer, inquiry. Those are all the process by which I will complete the assessment. Okay. However, I told you 6 years is mandatory. I told you 6 years is mandatory. One of the exception to that rule is if the search is conducted during election time, cash is seized. It all pertains to that year only. Okay. During the course of election, if the department identified unrecorded assets, money, bullion, jewelry in possession of a person in a particular election constituency, then the same will be taxed only for that particular year. At the time of election, you see lot of cash being seized, jewelry being seized, etc. That I will not take it as search and seizure of the whole business premises of the assessee. That is, that election constituency, that person, only that year it will be taken as income and taxed. Read that whatever is there in page 131 before going into the next one, not section, page number 130. Okay, okay, right. Followed by this 153A, followed by that is 153B, within what time you need to complete the assessment. Where the search is conducted after 1st April 2019, within 12 months from okay, from the end of the year in which last of the authorization is executed. Okay, within 12 months from the end of the month in which last of the authorization is executed. Okay, now I told you about this rebuttable perception. What did I say you? That it all belongs to you. Suppose you want to prove that it doesn't belong to you, don't prove to me. Go and prove your assessing officer. Go and prove it to your assessing officer. Here comes section 153C, where that you can prove it to the assessing officer. Here comes section 153C, block assessment of some other person. Block assessment of some other person. What is that? Where a person is being searched. Proves, only prove to the AO, assessing officer, not the authorized officer, that asset belongs to some other person. I am a binami, sir. I'm a binami. The asset is not mine. The asset belongs to some other person. Books and documents pertains to some other person. I'm just casually holding it. Information relates to some other person. Where the person who is being searched proves that asset belongs to some other person, books and documents belong to some other person, information collected relates to some other person, okay, that other person is deemed to have been searched. That other person is deemed to have been searched. Okay, that other person is deemed to have been searched. Okay, and what the assessing officer will do is he will hand over all documents to the other assessing officer. See, I thought my man is searched. No, it is your man who is searched. This is just a binami. That other person is the main man. So the other officer will continue the assessment as if this other person is being searched. Where AO is convinced of the explanation provided by the person searched, then he shall hand over everything to the AO of that other person. Where the AO of other person identifies on the basis of all documents and provided to the other has not been declared, then this will continue for the other person. This will continue for the other person. As if he is being searched. Here the time limit 12 months from the end of the year in which last of the authorization of search is executed, or 12 months from the end of the financial year in which you handed over my books. Till then you are keeping it. Whichever is later. So obviously the second will be later. The second will be later or same at least. Okay. The first one is just what do you call bookish provision. The second one will be the main provision. And then I told you when I started with 132, there are three sections 132, 132A, a requisition for books, 132B. In 132, we said assets will be seized. Assets will be seized. How will that seized assets be utilized? That is what is 132b, utilization of seized assets. Okay, the assets are seized in the process of search will be first utilized for any existing tax liability. Okay, amount of liability which is going to be determined at the time of search, and any other liability of settlement commission. Now settlement commission is taken off. Okay, how will the assets be used? First, the money seized will be, first the cash will be used. If the cash is unable to cover the full liability, then other assets. Assessee has the right to claim surplus assets. Okay, assessee has the right to claim, you seized everything. My tax due itself comes to 10 lakhs. Why are you having 1 crore worth of assets? My tax liability maximum comes to 10 lakhs. You are having 1 crore of my asset. Release that balance 90 lakhs surplus asset. This he will do so by presenting an application to AO within 30 days of seizure. AO is convinced of the surplus asset, then the same shall be returned within 120 days of making application. Where you don't return it, interest at the rate of 0.5% becomes payable. Always interest for us is 1%. Interest for department is 0.5%. Okay. Refund also 0.5%. Other aspects of 132. Okay. Provisional attachment. Okay. Don't sell off your asset. Don't deal with your asset. Don't destruct the building for the purpose of protecting revenue. Authorized officer during the course of search or within 60 days, because he has only up to from 61st day, it is assessing officer. If necessary to do so with the prior approval of the investigative wing, because that is what is searching, by order in writing, provisionally attached. They will say this belongs to income tax department only, attaching the property. You cannot sell off this asset without our consent. Such attachment shall cease, okay, after the expiry of a period of 6 months from the date of attachment. Okay, reference to valuation officer, author. Okay, so you have seized the money, you have seized the assets, you don't know its value, you have seized the jewelry, you don't know when this jewelry was purchased, when, what model, etc. Authorized officer may, during the process of search or within 60 days, make a reference to the valuation officer, who shall estimate the fair market value of the property at the relevant section and submit a report. Okay, these are all section 132, search and seizure assessment. Search and seizure assessment. Okay, right? It all started with 132. A quick look at it. 132, search and see. 131, powers of the civil code. 132, search and seizure. 132A, requisition of books. 132B, how the money seized will be utilized. 153A, block assessment. 153B, time limit for completing block assessment. 153C, a block assessment of some other person where the assets belong to, information pertains to, documents, okay, or referred to some other person. Our travel so far. Filing of returns, where I asked you to remember 139, 139.3 loss return, 139.4 revised return, 5 belated return, okay. Then the 2 case loss. Then I proceeded to first level assessment, 143 prima facie adjustments, 143.2 notice for scrutiny assessment, 143.3 assessment, scrutiny assessment, 144 block best judgment assessment. The case laws relating to that, Maruti is the main case law, region is another case law. 147, we had a very thorough understanding of reason to believe along with the case laws. Such income and any other income along with the case law. We also saw how many years, when that condition will not apply, at what rate it will be taxable. Up to 152. 153A, block assessment, B, time limit, C, other person, and it starts with 132, 132A, 132B. Okay. After 153C, it is a jump. We are going to study 246 and all. What, sir? In between you are jumping 90 sections? 160 to 170 or 180 talks about representative assessee. In the event of dissolution of a firm, in the event of liquidation of a company, in the case of death of a person, in the case of 170 to 180, when is previous year assessment year the same? Non-resident shipping business, persons leaving India for the purpose of employment, then TDS provisions, advance tax provisions, interest provisions, then again administrative. So in between block, we have studied some, we will study some, we are going to study some. The in between block I am not skipping and going. It is not part of this administrative procedure, so only you will find a jump. Okay, but anyhow, having started with 131, 132, let us complete 133 also, that is with regard to survey provisions. That is with regard to survey provisions. Okay, right? 133, power to call for information. I'm sitting and calling for information. Okay. Under the existing provision, this power can be used by any officer of assessment or cadre or above him. Obviously, superior authority will have power. However, when there is no proceedings which are pending, then this can be exercised only by the topmost authority. What is this power? Very simple. I am calling for information. In the case of firm, I am asking the information. Who are all your partners? What is the share of profit? Give name, address, PAN of everybody. In the case of HUF, Karta and its members. Any other assessee, name, address and details of beneficiary who are paid rent. To whom are you paying rent? Any royalty, interest, salaries or other things. From a broker, I can get the details of investors and any other relevant information. From the banker, I will get who are all having deposit more than 1 lakh. This year, who are all have deposit more than 10 lakhs. This is power to call for. I will send a notice. All these things are going for face listing now. Okay. No more these are physical. Faceless notices, faceless things are going to. Power to call for information. power to go and obtain is known as survey. Sitting at an office and asking them to produce is calling for. Going into a business premises and getting information is known as survey. Is known as survey. Income tax authority may enter within the area allotted to him any place occupied by any person to whom he exercises jurisdiction. You are an assessee in my area, and for your house or your business, mostly business premise, I can enter. Or you are there in Mumbai, there also I can come, because you are an assessee who is within my jurisdiction. Any place in which he is authorized for the purpose of this section, any place or at a place where business or profession or charitable care is carried on, whether such place is a principal place or not, I can enter. What for I am entering? Just to understand whether you have filed your returns and other things. Powers are to ask the assessee to provide necessary facility to inspect books, documents, etc. To verify cash, stock and other valuable articles, and to furnish other information. Okay, right? And it is only during the business hours. There are a lot of case laws. If the business is conducted, call center which is conducting business at night you can go. Business hours is different from office hours. Whenever business is conducted, it is known as business. What can I do? Place mark of identification. That is the first thing as audit also we are supposed to do. After this, don't pass any entry without my consent. Or this is the inventory taken. Place mark of identification. Retain in his custody books of accounts and documents for 15 days. Beyond 15 days, you need the power of the superior most authority. CCIT, PCIT. Beyond 15 days. In our table, they are the topmost authorities. Chief Commissioner, Principal Chief Commissioner, their powers should be there. Take note of any cash, stock or other valuable things. Record the statement of the person. However, he cannot remove or take in his possession anything other than books of accounts. Okay, right? And this survey is useful for this purpose, my dear friends. Whether, because in the future this is going to be with TCS expanding, TDS expanding to goods also, for the purpose of verifying the tax has been deducted or collected at source. The authorized officer may enter an office or place where business is carried on and require the deductor or collector to afford him the necessary facility to inspect. Okay, this is the main aspect of this survey provision now. Again, survey is physical, so you cannot make it faceless. But for TDS, TCS only, it gets important. Power to collect information and record statement. This is at the time when a big event is happening. Okay, a grand wedding is happening. Okay, or a big event is being happening where huge amount is being transacted. The income tax authority would have power to collect information and record statement of any person concerned at any time, any function, ceremony or event before the stage of commencement of assessment for which information may be relevant. You have spent on your daughter's wedding 1 crore. So I'm just keeping, okay, you all know that it is exchanged in the dais itself so much of money. If they are of the opinion that having due regard to the nature, scale and extent of expenditure, it is necessary to do so. Okay, this is collection of expenditure. power to enforce compliance. Okay, if any person is required to provide facility to the officer to inspect the books or other documents or to verify cash, stock, etc. valuable, or to furnish, okay, refuses or averts to do so, then the income tax authority will use the power of civil court. அது எங்க வரும் 131. That is where we read that power. Okay, right? And that is only to the superior authority. The last is inspector of income tax, just go entering a place and collecting information, not even he is going to see anything. He will just get the income tax details. All these things can also be used under reassessment. We saw information collected can be used. Okay, with this, that 133 also ends in this. Enough if you know simply about survey, other things are not important. Everything is becoming faceless. Everything is becoming faceless. The notification is awaited, but everything is becoming faceless except survey, that can only be physical. So we have studied the three types of assessment, with the tail being best judgment assessment. All these are becoming faceless assessments now, but generally the process you understood. The rarity of question is because it is all going to become faceless. Okay, right? It is all going to become faceless. Let me complete the case laws pertaining to this and go for subsequent level. The first case law is about, I don't know why this case law went to Supreme Court. CBDT circular, CBDT has powers under 119 of income tax. The circular amended the provisions under 68B of the law. CBDT is a subordinate authority. Whatever the law says, for that they can give clarification notification, implementation notification, and others. It's a subordinate of the law. Act is superior, they are subordinate. Okay, can they amend the act itself? The issue under consideration is whether the CBDT has the power to amend the legislation, and it went to Supreme Court to say no. The Supreme Court observed that CBDT does not have the power to amend legislative provisions, okay, by a circular. The High Court has held that on similar grounds. The Supreme Court accordingly held that the decision of the High Court squashing the circular as ultra virus is upheld. Okay, right? I told you under 132 that you can call for, the usage of seized assets. This assessee who is being, who is coming under search and seizure came to us and told, sir, you have seized my asset. Immediately sell it off. Don't wait for the assessment to get over, sir, because I will at least save 232B or 234B. Immediately sell off my assets, sir. Adjust it with my tax liability. Don't wait. Should the assessing officer do so? The answer is no. Unless assessment is over, tax cannot be determined. Unless assessment is over. He has said, sir, my undisclosed income is 5 crores, sir, so complete everything. Unless assessee applied for adjustment of tax liability of income surrendered during the search process by sale of the assets, whether AO is duty bound, section 132B specifies that asset seized shall be adjusted against the existing tax liability. Tax liability crystallizes. It is known only when the assessment is completed. So AO is justified in his conclusion that only when the tax liability is crystallized, he can do so. Okay. 133 gave us the power That to call for information, to call for information. I asked the bank, who are all the persons who have deposited more than 10 lakhs? Can you please give me the detail? The bank replied me back, Mudiyad, I cannot. Tell me who are all the persons whose case is pending. I will tell you whether they have deposited or not. Why are you asking me more than 10 lakhs? I told I have the power to ask. Bank said no. Only if the assessment is pending, you have the power. Is it so? Can AO call for information under 133(6) even when assessment is not pending? Yes. Held by the Supreme Court that information of general nature can be, because that can trigger assessment also. This person has deposited 75 lakhs, but he has not filed his return. The assessing authority has not erred in issuing notice requiring furniture. Okay. Is opportunity to be heard mandatory in law? Yes, that is superior. That is superior. Reasonable opportunity can be dispensed of only in care where it is not possible to provide. The discretion of the authority is to decide what reasonable opportunity is. The authority cannot proceed without giving him a reasonable opportunity. That is what type of, whether by show cause notice or whether by calling for him and speaking, that you can decide, but you should give opportunity. Okay, right? So the three types of assessment are over: scrutiny assessment, reassessment, and block assessment. Along with that, we also know best judgment assessment. Assessment is over. What do I mean by assessment is over? Assessing officer signing off the assessment order means assessment is over. Assessing officer signing off the assessment order means assessment is over. What happens after that? Three things, actually four things can happen. The first thing is not bigger, accepting. Okay, sir, everything I pay the tax. That's rare. So three things can happen: rectification, review, appeal. Three things can happen: rectification, 154. Rectification of a mistake. The assessing officer, I passed the wrong assessment order. Rectification of a mistake. Review by the superior authority, commissioner. Appeal, where the assessee goes for an appeal. These three things can happen. But before that, in this process, if you remember 139, 140 about signatories and self-assessment, 142 the process of assessment, 143 3, 140, 143 1, 2, 3, 144, 145 is not there. Okay, and then we in this 144 there are two things which I am going to deal with it, and then go for rectification, revision, and appeals. First, I am going to deal with what happens after assessment for a transfer pricing case or non-residence. All of us listen. I don't want to prolong the process. Prolong, na? It will be appeal, long time to complete. So, what I do, all of us listening only. What assessing officer does is, I send a draft order to the assessee. Raja, this is what I am going to pass. Do you have an objection? In which cases? Transfer pricing and non-residence. Assessee receives the draft order. I don't have objection. within 30 days, if he don't object to it, or he conveys his acceptance, finalize the order, close the assessment, so that this appeal and all is saved. Assessee says, boss, I have an objection. This order is not correct. Do one thing. I will lead you to one other body called Dispute Resolution Panel. Dispute Resolution Panel or Alternative Dispute Resolution. Why you go to appeal, commissioner, ITAT, High Court, Supreme Court? Come here. For you, I am facilitating something. DRP. Assessee will file his objection to DRP, saying, I don't accept assessing officer's assessment order, draft order. DRP on receipt of objection by the assessee will call the assessing officer. Give me your assessment order. What are all the information you relied on in preparing this assessment order? Give me everything. And DRP, if they feel that assessing officer should go more detailed into it, order the assessing officer, go further deeper into it. And get me all the information. After that, DRP will give direction. No direction prejudicial to the assessee can be given without his consent. So, opportunity to be heard. Once DRP gives the direction, that becomes final. Final only for the department, not for the assessee. Assessee can go against the DRP's order to the tribunal, but one level is saved. You can directly go to the next level. Okay, so comes the first procedure which I am going to take you to. So reverse banner only I am going. Okay, is popularly known as Dispute Resolution Panel or alternative. Alternative means already existing appeal is one style. Other than that, alternative dispute resolution mechanism. Fast track. Within 9 months, things will be over. Procedure commences after AO has completed the assessment, passed the assessment order. Transfer pricing cases, and from this year, non-residents also, which is going to be the biggest ever change for the year, because non-residents can come under alternative mechanism instead of going through normal. AO completes the assessment if there is any variation, that is the income declared by the assessee is not agreed by the AO. He says that I am increasing the income. Then forward a draft order to the eligible assessee. Draft order to these people. Within 30 days of receipt of draft order, you can say I accept, or you can be silent, which means you have accepted, or file your objection to DRP. File your objection to dispute resolution panel. Where no objection is received within 30 days, or where assessee has accepted, then AO completes the draft order. You have not filed, then I presume that you have accepted, or you have communicated to me, okay boss, go ahead, complete it. Okay. Such order will be passed within 1 month from the end of the month in which acceptance is received, or 30 days period is over. Where objection is received, then case now goes to this nodal body. We call them as quasi-judicial authority. We call them as quasi-judicial authority. Have you studied quasi-judicial authority? Yes. Advance ruling, APA, quasi-judicial authority. DRP is one more. Where objection is received, then the case moves to DRP. The power and scope of DRP is to direct, guide the assessing officer to enable him. Because DRP cannot guide the assessee. You do these things, you do the. Okay. DRP shall consider the following before issuing any direction. The draft order, objection filed by the assessee, evidence that the assessee is producing, report of the assessing officer, valuation officer, transfer pricing officer, and what are all aspects you took into consideration while completing the assessment. Once more, DRP, what are all they will consider? Your order, assessing officer's order. What is the objection assessee has? What basis you furnished that order? What are all evidences you collected from the assessee? Where is the VO's report, TPO's report, any other reports? And DRP can also make further inquiries. I am not satisfied with what you have done. I will make further inquiries, or DRP will ask assessing officer itself to make further inquiries. DRP may have, before issuing any direction, make further inquiries, order the income tax authorities to make further inquiries. After that, what DRP will say, either I will confirm, okay, whatever has been done is right, or reduce or enhance the variation proposed. Okay, the power to enhance, okay, shall include the power to consider any matter arising out of the assessment proceeding. Every direction of the DRP is binding only on the assessing officer, only for the department. Opportunity has to be given to both assessee and assessing officer, and this is the beauty. Directions have to be issued within 9 months from the end of the month in which draft order is passed. On receipt of direction, AO shall complete the assessment and hand over. Now DRP is now also going faceless. Procedures are going faceless. This is for now non-residents also. Quick read through. Okay. DRP, alternative dispute. It's still a very dynamic body, becoming more powerful. So have knowledge on this for your examination purpose also. Okay. The one other okay, like DRP, there is another nodal body or another quasi-judicially authority which is known as approval panel. Once more, it is known as approval panel. What for they are? They are for impermissible avoidance agreement. Impermissible avoidance agreement, which is nothing but a result of GAAR, General Anti-avoidance regulations, GAAR, general anti-avoidance regulations, okay, and because of which a thing becomes impermissible. The provisions are contained in section 94, 95, 96 of the law, okay, and the approval panel's involvement is coming under section 144. So I am going to read that. We are going to understand the provision and then read this. Okay. This in our institute material, you will call it as tax planning, tax evasion, etc. In that chapter, they are covering it. Okay. A transaction is designed in a manner that on bare reading of the transaction, it looks okay, but behind that is an intention to evade tax. If you look through the transaction, I have got a money loan from a German company to the extent of 10 lakh euros and I am paying them interest. Nothing wrong. German company has given a loan, they are getting interest. What is wrong in this? Nothing. Last year, I have paid some money to a Dubai-based company. That Dubai-based company happens to be the subsidiary of the German company. When I get information from foreign source, I understand that Dubai-based company has given that money to the German company. In law, we call it as round tripping. Money goes, it is my profit, it goes outside in some other form, round tripped and come back to me, and for that I am paying interest. On paper, got loan, paying interest, fine. When I look through, when I disregard the corporate wheel and see that the transaction is having a round tripping, anti-avoidance. The agreement is not valid. Okay. A company in Dubai has sent an invoice that they have transferred some royalty, etc., which is normal. But later I understand that company itself is not the owner of the royalty. The royalty is held by some other person. How it is being done? Ireland, some of the Middle East countries are used as tax havens by the multinational companies. What is colloquially known as on-paper companies, just for paper companies, are practically known as sham companies or just incorporated. Through that, they raise the invoice so that the money goes to a tax haven where it is not taxed, ultimately goes to the owner. Accommodation bills. Okay. All these things are coming under an N. So, an assessing officer, an assessing officer at the time of assessment identifies that this invoice is not proper that this is not a permissible thing, or I am having doubt. I am not, the assessing officer is not jumping from sky. He also might not have sufficient knowledge. So what he will say is, assessee, please wait. I will send this agreement to my approval panel. Let them take over it. Why you are sending? I believe there is an impermissible avoidance agreement. Then define me impermissible avoidance agreement. Okay, so process starts in 144, but I am going to go on a regular, on a straight line basis to make you understand. Okay, there are two types of anti-avoidance. Specific, law itself says payment to a relative should be at fair market value. If any payment is in excess of fair market value, such excess will be disallowed. Anti-avoidance, you are trying to shift your profit. Cement division supplied to infrastructure division 20 cement for 20 lakhs. Had I sold it in the open market, I would have sold it for 25 lakhs. Why you are supplying only at 20 lakhs? So that the profit of infrastructure division is more, they can claim 80 a year, so I did it so. Inter-unit transfers should be only at fair market value. Transfer pricing should be at arm's length price. All these things, specific anti-avoidance regulation which are available in the law itself. For that I don't need God. For that I don't need God. There are SAR, specific anti-avoidance, which is part of law. And what is God? Okay, all of us. Notwithstanding anything contained in the Act, this one section overrules the remaining 295 sections. Notwithstanding anything contained in 40A, PGBPA, Administrative Provision 139, notwithstanding anything contained anywhere in the Act, all other section I am overruling. An arrangement, the whole arrangement, or part of the arrangement, one part of the arrangement, or one step in the arrangement. An arrangement, or part of the arrangement, or a step in of the assessment entered into by an assessee may be declared as impermissible, and the consequences, as if that, and what consequences I'll tell you, as if the agreement has never been entered into, in relation to tax arising therefrom is determined. So, section 95 base law. Notwithstanding anything contained anywhere in the Act, if I feel that an agreement fully or part of the agreement or a step in the agreement results in impermissibility, where you are trying to evade tax, then the consequences will apply. Okay, sir. Can you explain me this step in measures, part of the agreement? I will do it, sir. Section 96. Section 95 base law. Section 96. Impermissible avoidance arrangement means arrangement, the main purpose of which is to obtain a tax benefit. A plus B or C or D or E or F. For example, I'm just telling you for example, A plus A. What is A? The main purpose of that agreement should be tax avoidance. You are trying to get tax benefit. That is A. Plus it can be B or C or D. A is mandatory. It should be proved that the agreement is for obtaining some tax benefit. The following should also be okay satisfied. It is all or. That is should be satisfied. The following creates rights or obligation which are not normally created between persons dealing at arm's length price. I imported a machine from US. The normal arm's length price is 1 crore. I imported for 1 crore. No problem. The normal arm's length price is 1 crore. I imported it for 1 crore 20 lakhs. SAR will take care of it. Section 92 says it should be at arm's length price. Where it is not at arm's length price, AO shall change the income in such a manner. So, specific. Here 1 crore and I have imported it for 1 crore. No problem, correct? No problem. When I look into the invoice is like this. 70 lakhs is for mission, 30 lakhs for installation. So what's that? A similar invoice for other parties shows me as 50 lakhs for mission and 50 lakhs installation. If it is installation, I need to deduct tax at source. The Indian entity should deduct tax at source at 10%. Fees for technical services, I need to, and it is taxable. If it is goods value, there is no TDS. So what did the assessee, the other person did? 1 crore arm's length price fulfilled. The component of goods value is more, service value is less, so that income accruing or arising in India is lesser. Creates rights or obligation which are normally not created. You have dealt with. If ALP is wrong, then 92 would have taken place. ALP is right, but the inside component is wrong. We are aware that when we import goods, import duty is paid, which can be availed as an input credit, and the person from whom it is imported gets full consideration. Whereas when we import services, we are liable to deduct tax at source and remit the balance only. In a circumstance of goods and services, for a goods part there is no withholding of tax, but whereas service part there is. The total consideration paid is split in such a manner that the quantum of goods is inflated to a larger extent and services smaller. However, the overall ALP does not get affected. This is a situation which affects the rights and obligations which are not normally created. Results directly or indirectly in misuse or abuse of the provisions of income tax. Accommodation bills. What is accommodation bill? Sham companies raising bill. Related parties raising bill. If it is covered under 48 different. Okay? Okay? Right? Misuse or abuse of the provision. Substance over form. Law is followed in the form, but as a substance, the transaction is lost. In this, long back when we were doing international taxation, I was telling you in capital gains. Quick recollection, okay? I'm not taking much time, but I want you to be very clear about it so that if there is an examination question, you are hitting at it without any difficulty. That's why little extra time I'm taking in this, okay? I take your permission and do it. Okay. Capital gains we saw. If the substantial part of the worth of the value of the foreign company is from assets in India, that becomes taxable in India. Vodafone case, etc. In that we gave one exception. If he is a 5% shareholder, small shareholder, who is not influencing, then no problem. So what I did, I created 33 shareholders, each holding 3%. I created 33 shareholders, each holding 3%. Not taxable in India, though even though the substantial part of the value of the asset is from Indian, but it is that company's shares when it is sold not taxable. Sir, I am a 3% shareholder, sir. I am not even a director. 3% shareholder, sir. Okay, not taxable. But impermissible. Misuse or abusing. I gave you with a genuine intention. The form of the transaction is different, but the substance of the transaction is doubtful to me. Law is followed as a form, but the substance results in tax avoidance. Splitting of investment into smaller components to avoid taxation in India is a circumstance where law is abided, but the intention is tax avoidance. Lacks commercial substance or deemed to lack commercial substance. Round tripping. I cannot invest in Dubai. You can invest. You invested in Dubai. That Dubai company in a Singapore company. That Singapore company in Ireland. That money came back to you. Here I am getting suspicious. Of course, it's very thin line of difference between 2 and 3. This is also, you can say, directly or indirectly misusing or abusing the provision. Round tripping. Treaty shopping. Some countries say royalty is exempt. Some countries say interest is exempt. Majority of the European companies are saying for a partnership firm, it is not taxable. Share of profit of the partners also not taxable. So I start a partnership firm in Europe. I start a royalty company in Dubai. I start a finance company so that treaty shopping. This country is not taxing this particular item. Then I'll go and open there for only that item, not with the intention of doing business. Okay? Treaty shopping. such things will be lacking commercial substance. Okay. Arrangement section 97. It's a specific section which explains the substance or effect of the arrangement as a whole is inconsistent or significantly different from individual steps in. You gave loan, he gave investment, that person gave royalty, that money came back to you. Everything seems to be legally correct, but substance, arrangement or whole of the steps are in such a manner. Tax consequences should be assessed based more on the substance than anything. In other words, it affects inherent ability. Round tripping, I told you what is round tripping. Arrangement in which through series of transactions funds are transferred only to obtain tax benefit. There is no commercial aspect. Accommodation bills, which as an auditor you all know. Okay. If the main purpose of participating is to obtain tax benefit, arrangement that cancels or offset commercial substances, transaction which is conducted through one or more persons and disguises the value, location, ownership or control of funds. Very popular across the world. Okay. Nobody knows who is the owner of that other company, but that company is the major source of, that company seems to be the major aspect. So, in those cases, involves location of an asset, place of residence or the nature of transaction which is without any substantial commercial purpose. Many sham companies are floated in tax haven only to obtain tax benefits. We all know that. 97.4 further clarifies that following factors are considered relevant but not sufficient. Period of time, payment of taxes, fact of an exit. Just because you have an agreement, just because the agreement has an exit clause, those things are not relevant. Okay, not sufficient. Arrangement lacking commercial substance. Okay, is entered into or carried out in a manner which are not bona fide. So, impermissible avoidance agreement. What does it mean? Okay, creates an obligation which is normally not created. Goods service split results directly or indirectly in the abuse of tax provisions. Treaty shopping, capital gains lack commercial substances, round tripping, accommodation bills, or this is not employed. Though all the 4 points are looking similar, maybe similar, but don't worry. If impermissible avoidance agreement is identified, what are all the consequences? I will deal as if that payment should not have been made. No agreement exists, or I will lift the corporate veil. Where an arrangement is declared IAA, who declares I will tell you very soon, then it may have the consequence of denial of the tax benefit which you obtain or denial of treaty benefits. The consequences include treating that the agreement has never been entered, disregarding the accommodating party or treating both of you as same. That profit will be merged with your profit, reallocating the expenses, income, capital and revenue in that differed due to IAA, treating the place of residence or location of an asset other than where it is now. You are not a resident of this country, you are and lifting of corporate bill. All these can be done. Okay. It is further provided an equity be treated as debt or vice versa. Round tripping like this is. A capital transaction may be treated as revenue. Expenditure, deduction, rebate and relief may be recharacterized. Okay, this is the same continuation. Section 99, treatment of associated enterprise. Connected person is nothing but relative and accommodating parties. According to this section, in determining whether a tax benefit exists, parties who are connected person in relation to each other may be treated as single person. Accommodation will be disregarded. Accommodation party and the other party will be treated as same person, and the corporate wheel will be lifted. Okay, holding company, subsidiary company, two different companies. Why? Because of corporate wheel. If I lift the corporate wheel, holding and subsidiary becomes the same company. I can do so if it is done with the intention of avoiding taxes. Important, when it is not applicable, threshold limit 3 crores. Arrangement where the aggregate tax benefits is less than 3 crores. For a FII where there is 90-98, that is agreement is there. Non-resident who invest in offshore funds and investment made before, okay, that leave it. I will complete this and give you time to study so that now coming to what is that assessment. Reference. Assessing officer is the starting point for all these things. Okay, look at this. AO can make a reference to the principal commissioner at any stage of assessment proceeding on the basis of materials and evidence. He cannot declare. He will say, boss, I think this man is trying to avoid the tax by making multiple transaction. Can you look into it? So AO refers. AO shall be making a reference to commissioner, issue a notice in writing to the assessee to seek objections. He can ask the assessee opportunity to be heard. On receipt of reference, now the commissioner will issue a notice to the assessee for submitting objection. The commissioner will now say, Commissioner ko, he will not know. He has to go to the approving panel. Commissioner will issue a notice to the assessee. Do you have any objection in me going to treat this, take up this case? Where assessee does not furnish objection, then they themselves will declare, commissioner himself will be declaring it as impermissible avoidance. Once more, where assessee does not furnish objection, then the commissioner will declare, as he did for declaring the arrangement, as IAA. Assessee objects. Who said this is impermissible? Where assessee objects to the action and he is explaining to the satisfaction of the commissioner, then he will write to the commissioner, will write to the AO, seems to be normal, you go ahead. Where assessee objects, but the commissioner is not satisfied with the explanation offered by the assessee, he will say, wait, let us go to a quasi-judicial body approval panel. So can I quickly tell you the steps? One of our friends in feedback has also written to me, why are you not explaining it as diagrams? Okay, honest opinions. One, I don't know to draw diagrams. Okay, let me be very honest to you. I don't know to draw diagrams. I study it in my mind. I put the diagram, but I don't know to put it. Okay, that is a smaller thing. I can source someone and put it. Second, everywhere diagrams are there. If I refer to institute material, if I refer to some other materials, everywhere diagram is there. So I don't want to go by the diagram style. I go by paragraph. So as you can now look at the AO is suspecting. He is intimating the assessee and referring it to commissioner. Commissioner asks assessee whether is there, why is this not correct. Assessee gives explanation. commissioner satisfied with the explanation, he will tell the AO, everything seems to be normal, go ahead. Assessee can also say, okay, sir, you can declare it as impermissible. Though it is practically, it will not happen, but that provision. Assessee objects, commissioner is not satisfied. Now you need a specialist. Tomorrow when we are doing assessment unit, I am going to tell you about technical unit and all. At that time, this will be useful. Okay. I refer the matter to what is known as an approving panel, like DRP. Approving panel shall call for and examine records, make further inquiry, DRP, or direct them to make further inquiry, require the assessee to produce more documents as it may deem fit. After examining all these things and after going through same DRP, after this DRP, all evidence and taking into account, approving panel shall within 6 months from the end of the month of receipt issue direction to declare it as an impermissible avoidance agreement, and the consequence will follow. We know what is the consequence. Where a direction is received, it is binding on the department. AO has to complete with the direction. AO shall have prior approval for passing the assessment order, and appeal cannot be preferred against such direction by the department. However, assessee will go on an appeal with the assessment order. Okay, this is one of the, I have covered a chapter tax planning along with this. So patiently go read through. Give me a 5 minutes. So this is also two things. I went, we completed 95, 96, 97, also taking this as an opportunity along with 144. So remember, approving panel and DRP, this is part of tax planning exercise in our material. This is the major. Other tax plannings you all know, 115, BA, BAA, BAB, which BAC, which we will see later. Whether to set up a unit in a backward area, etc. Whether STCG way is more beneficial. Those are small tax planning. This is a tax avoidance measure which the law has taken. So this is about assessment. Assessment is over. What happens next? Assessment is over. What happens next is popularly known as post-assessment scenario. Assessment order passed, everything done. For the department, what? For the assessee, what? Assessment order passed. Suddenly, the assessing officer identifies he has done a mistake. To err is human. If assessee files an income tax return and he later identifies that there are some errors and omissions, he files a revised return. He files a revised return. To err is human. To forgive is, and also income tax law. So you are allowed a revised return. Assessing officer is also a human. He makes a mistake. Given an opportunity to rectify his mistake under section 154. Okay, under section 154, post-assessment scenario, rectification of mistake. Where AO has made a mistake Mistake now what it is? Inadvertently. I wrongly allowed it as capital expenditure. I wrongly allowed it as revenue expenditure. It should be only a capital expenditure. That is change of opinion. That is not a mistake. Inadvertently, you did something. There was a Supreme Court judgment. You were not aware of the judgment. You passed an assessment order. Later, you come to know that the judgment, your assessment order, is not in line with that judgment. Mistake. Non-disputable. Prima facie adjustment, I told you. Non-disputable, non-debatable. Okay? Where AO has made a mistake in the assessment order, then on his own suo moto, or by a reference, commissioner calls him and says, hey, what you have done this mistake, or by an application made by the assessee, he shall rectify such mistake. Okay? Where there are mistakes in the intimation, I told you 143 prima facie adjustment, they send an intimation. Intimation is normally a one-way communication, but there is a mistake. Can you write to the computer saying that computer G, आपका आंसर गलत है? Can you write to the computer? You have to go to the AO. Where there are mistakes in the intimation, either for your normal returns or ETDS returns, okay, and also no such rectification which is prejudicial to the assessee can be done. Principle of natural justice without giving opportunity to the assessee. What is a mistake? Apparent on record. Mere change of opinion should not be the reason. If AO has failed to consider a circular or a judgment, then it will be treated as a mistake. It is already there, not retrospective. It is already there, which you have accidentally omitted. Then also it is a mistake. Then also it is considered as a mistake. Time limit. Where application is made by the assessee in 6 months corrected from the end of the month in which application is made. Within 6 months from the end of the month, you please correct it. Where suo moto or by the superior authority within 4 years. Within 4 years from the end of the month in which order is sought to be passed is rectified. Okay? Where the period of completion is less than 6 months from the date of presenting of application by the assessee, then 6 months will be valid and not 4 years. Then 6 months will be valid and not 4 years. What is this? Okay, right, let me explain you. Time limit for 154 rectification. Date of order. December 11th 2016. End of month 31st December 2016. 4 years from end of the month of order. 31st December 2020. 31st December 2020. 4 years from the end of the month in which the order sought to be rectified is passed. Application is made by assessee for rectification on 1st October 2020. Look at the law. Where application is made by the assessee within 6 months from the end of the month in which application, normal time limit 6 months from the end of the month in which application is made. So October 31st, November, okay, November, December, Jan, Feb, March, April, 6 months from the end of the month in which application is made. So April 30th, 2021. But 4 years ends on 31st December 2020. 4 years ends on 31st December 2020, but time limit for 6 months from the date of application goes beyond 4 years, 30th April. Should this or this prevail, that is what the law clarifies, okay, where the period of completion is less than 6 months from the date of application. Date of application October, period of 4 years 31st December, it is less than 6 months, where the period of completion is less than 6 months from the date of presenting the application, then 6 months is only valid and not 4 years. So here comes the time limit explanation. It is valid up to 30th day. Such things might be rare. Such things might be rare, but still. I'll write the heading little later. Date of order 11th December 2016. End of month. Let me take some time, but if you understand it, over 31st December 2016. Rectification, okay, is taken up suo motu. Okay, rectification is taken up suo motu 11th December 2019. Rectification is taken up suo motu 11th December 2019. The law says in any other case 4 years from the end of the month in which the order sought to be rectified is passed. Can I rectify again the order passed? Yes. Rectified order can also be rectified. Rectified order can also be rectified. Can I rectify the order again? Yes. Time limit 4 years from the end of the month in which order sought to be rectified is passed. This is ending on 31st December 2019. Okay. Therefore, time limit for rectification is up to 31st December 2023. The law says 4 years from the end of the month in which rectified order or order sought to be rectified is passed. Originally, I passed the order. I rectified it again on 11th December 19. Can this be again rectified? Answer is yes. What is the time limit? In Hind Wire's case, the Supreme Court held that subsequent order becomes valid from the date of passing it. In other words, AO will get 4 years from the end of the month in which rectified order is passed. Not from the original order, from the rectified order is passed. So he gets 4 years time from here, and the amendment can take place till 2023. December 2016, that AO allowed some expenditures and disallowed few other expenditure. End of month is 31st December 2016. Rectification, rectification on 11th December 2019, considering certain receipts as deemed income. He amended the order saying, I missed it out considering certain income. On 1st Jan 2023, AO further rectifies saying some expenditures which he allowed in the order passed on 11th December 2016 needs to be disallowed. Patiently, he originally passed an order allowing some things, disallowing some things. So he will get 4 years time. So up to 31st December 20 he can. On 11th December 19, he rectified the order by considering certain receipts as income. Nothing to do with allowance or disallowance. On 1st January 2023, he says some expenditure which I allowed here is not allowed. So I am rectifying my order by disallowing. Assessee contended that it is embarked. You should have taken it up before 31st December 2020, only 4 years. AO contended, no, he gets 4 fresh years from date of rectification. So amendment can be made before 31st December 2023. AO contents, no. From here I will get 4 years, so I can do that. Are you understanding? Okay. I'm taking this time because next sections also speaks about it. AO says, boss, look at law. 4 years from the end of the month in which order sought to be rectified is passed. Therefore, I will get up to that year. I amended it once. I have amended it once. And from here, I will get 4 years. So it is within that time limit. Court said no. Said no. Read the line. 4 years from the end of the month in which order sought to be rectified is passed. What are you trying to rectify? What are you trying to rectify? You are not trying to rectify this. For this you have 4 years time, I accept. You are trying to rectify this. You are trying to rectify this. No chance, boss. No chance. Order sought to be rectified is not passed in 2019. What you passed in 2019 is about deemed income. You want to rectify that, take up to 2023. But what you are trying to rectify is something which is passed in 2016. So came a concept which is very, very mind-blowing concept. Okay? In our tax laws, partial versus complete merger. Partial versus complete. One order is there. A new order gets passed. This order goes and merges with this order. An order is there. A new order is passed. Is the old order going and merging with this? No. Whatever aspects that are spoken in both the orders merges. Partial merger, not complete. Partial merger. I spoke 5 items in the original order, 3 items in the rectified order. These 3 merges. The remaining 2 does not merge. For the remaining 2, the date of order is 2016 in our given example. Partial versus complete merger. Income tax law recognizes partial merger. Those matters which are spoken about in both the orders merge. No doubt. Other matters, date of original order only. So in this case, court said no. What you are trying to amend is passed in 2016. What you are trying to rectify is passed in 2016. That has not merged with this. Had it merged, yes, you will get a time. Hindu wire case law is interpreted. It is only partial merger. Complete merger, then you can keep on amending. No, It is only partial merger and not complete merger. So order sought to be rectified should be understood well. Okay, right? I will again come to this. Don't worry. Okay, then consequential amendment. One rectification leads to another rectification. Consequential. Did I use this word consequential elsewhere? Yes. I told you I will not ask you a question. I'll answer the question also. Okay. I have used it elsewhere. Where did I use? When I taught you gift provision, I told you consequential amendment in capital gains. Normally, gift cost of acquisition is cost of previous owner. Holding period of previous owner will also be taken. But if the gift is from a non-relative, it is taxable in my hands if the value of the gift exceeds 50,000. So I have already paid the tax, taking it as income. Now not the cost of previous owner. Whatever I have declared it as my income, that fair market value or stamp value will become the cost. We saw a question of Praveen, a friend, gave cash gift, bullion and a land in Faridabad. Later that land is sold. I took the cost of acquisition as the value that I declared it as gift. Okay. So consequential because of rectifying the order of the firm, should I rectify the order of the partners also? Yes, because partners' remuneration is dependent on book profit. If the firm's income changes, partners' income changes. If the AOP's income changes, members' income changes. If there is an amendment to the holding subsidiary company, the other amendment should be. So, consequential. Because of one change, the other change becomes mandatory. Where a mistake is rectified under section 154, consequently another order also needs to be rectified, means consequential amendment. Firm's income, okay, then automatically partner's income will also be like that, consequential order. Friends, notice of demand, here only you should study. That is demand notice. Where assessment has resulted, any type of assessment including rectification, in any tax, interest, penalty or fine, then an order of demand shall be also accompany the assessment order. This apart, intimation can also be having a demand notice. If somebody asks you what demand notice is, section 156. Though all types of assessment, demand notice is in 156. 157 is intimation of loss, where assessment has increased or decreased the loss. The same needs to be intimated because next year, consequential amendment. Next year, the claim you are going to make, and all these becomes faceless now. All these things becomes faceless now. Before taking the break, let me complete the review also quickly. Rectification of mistake by the assessing officer, 154. Rectification of mistake of the assessing officer by the commissioner, 263 review. I told you, don't think I'm jumping. Nasar 157, you are jumping in between sections are all getting covered elsewhere. You know, 263. The commissioner, okay, it is popularly known as revision. It's not rectification. Rectification by the same person. Revision is by some other person. Okay. Revaluation by the same person who corrected your paper. Review by some other person. Review is not there, but I'm saying. Review by the PCIT or CCIT. Reviews by the commissioner. This review can be suo motu or reference made by assessing officer or even by the assessee also. Why should I review? The order passed by the assessing officer is having a mistake. Oh. And that mistake has resulted in revenue loss. Oh. Then we should review. Shall I repeat? Order passed by the assessing officer has a mistake, has an error, and that has resulted in revenue loss. Then you should review. But don't review it without going through the principle of natural justice. Where the order passed by the IO is having error, which has resulted in revenue loss. What is this, sir? Order is passed without considering a circular or notification. Order is passed without considering the judgment. Order is passed with excessive relief. Order is passed without going through all documents and records. He has not done the assessment properly. Order is having a mistake apparent on record. In these cases, which has resulted in revenue, CIT will review the order and rectify the same after giving an opportunity to the assessee. Within 2 years from the end of the financial year in which the order sought to be rectified is passed. Within 2 years from the end of the financial year in which order sought to be rectified is passed. Immediately now your mind will think, partial complete merger, partial merger, complete merger. ICICI Bank. Bank can claim provision for bad debts. Banks can have a forex difference accounting, various others. Assessing officer passed an assessment order saying, I am rectifying this, I am passing an assessment order, provision for bad debts is wrongly accounted, and commissioner takes up the review saying provision for bad debts, how assessing officer has computed is wrong. So I am rectifying, revising it. He revised it. Again after 2 years he took the case up and said, the way forex is computed is also wrong. Assessee contended your assessment, your rectification or your review is time barred. Commissioner said, no, I get 2 years from the year in which I have passed the order. Court said no. Order sought to be rectified is passed. Partial merger. Partial merger. Lark Chemicals and ICICI Bank. Should time limit under 263 be reckoned, with the date of passing of the assessment order, where the revision is in relation to an item which was not subject for reassessment. Original assessment order or reassessment order where the revision is pertaining to an item which is only spoken about in original order, not the reassessment. Held by the High Court that jurisdiction under 263 cannot be assumed on issues which are not subject matter in the order of reassessment, but only part of the original assessment. The period of limitation for the order under 263 with regard to a matter which is not discussed in reassessment shall be the date of passing the original order under section 143, by which we are now clear. Partial merger, only those matters which are spoken in both assessment order merge. Others doesn't merge. Others doesn't merge. Can I revise there? Yes. However, principle of partial merger applies. Going for faceless, this is also. But remember the time limit. Case laws can only be questions. You saw, I presented to you the recent 2 question papers also. I have not even considered these questions. Okay, but learning is good. Confidence boosting. 264. Order passed by AO is error, and that error has resulted loss to the assessee, prejudicial to the assessee. What is 263? Prejudicial to the revenue. Here it is prejudicial to the assessee. Then I rectify. But the time limit is different, and in case of suo moto, 1 year from the date on which order is sought to be rectified. In case of application by assessee, 1 year from the date of service of order. Only 1 year time, there it is 2 years. 264 is complete merger. Revision under 264 can happen only once. An order under 264 can be revised under 263, whereas 263 cannot be there. So, 148, that is reassessment, 154, 263 are partial merger, 264 is complete merger. Anyhow, faceless assessment is taking shape for all these things. Friends, I should have put it in some other place. I will teach you this in 253, don't worry. This is wrong here. I don't know how I pasted here, but it is wrong. I'll paste it somewhere else. Okay? Let's take a As I was telling you, the post-assessment scenario is 3 levels. Leaving alone the DRP, which is also a post-assessment scenario, but leaving alone that. Rectification under 154, which has larger extent, going to be faceless. 263, 264 also faceless, but the procedures and the time limits all remain the same. Only the methodology of conducting is different, but the procedures, but the notifications are awaited. Let's move on to the third recourse available, that is popularly known as appeal. What is meant by appeal? Appeal is a petition to a superior authority. Appeal is a petition to a superior authority saying that your subordinate has done injustice to me. Appeal is a petition to the superior authority saying, boss, your subordinate has not been fair enough to me, has done injustice to me. Our system has 4 levels of appeal. Our existing system has 4 levels. Commissioner appeals, the first appellate authority. ITAT, Income Tax Appellate Tribunal, High Court, Supreme Court. For these two things, income tax law cannot determine the rules. Those are part of constitutions and civil authorities. So, first and second, Commissioner appeals and ITAT. Commissioner appeals is now replaced to faceless. So, ITAT is a standalone aspect. Commissioner appeals has gone to faceless, but generally. So, we have a 4 structured appeal procedure. The last 2, High Court and Supreme Court, can be only matters of law. Question of law can only be appealed in High Court and Supreme Court. Question of law can only be appealed in High Court and Supreme Court. So we call ITAT, Income Tax Appellate Tribunal, as last fact-finding authority. Shall I repeat? ITAT is the last fact-finding authority. Question of fact stops with ITAT. Question of fact stops with ITAT. Beyond ITAT, if you want to go, it should be question of law. So, ITAT is the last fact-finding authority. Fine. Let's go the ladder one by one. CIT appeals. What can be appealed to CIT? Order passed by assessing officer below the rank of commissioner. Why I am taking this time is, commissioner passing an order, what is appeal? A petition to the higher authority. CIT level commissioner and ward commissioner are of same authority, are at same level. One is not above the other, they are same level. So, if commissioner passes an order, what orders are passed by commissioner? If you ask me, you remember trust 12AA, permission should be granted by commissioner, withdrawn by commissioner, 263 revision by commissioner, 264 revision by commissioner. All these things will directly go to ITA. All these things will directly go to ITAT, not commissioner. An order passed by an authority below commissioner will only go to commissioner appeals. Scrutiny assessment, best judgment assessment, reassessment, block assessment, mistakes rectified, intimations under for prima facie adjustment, TDS, TCS. If an assessee is identified as an agent of a non-resident, partition of HUF, all these things will go to commissioner. I want to talk a minute about 248, which is an important provision. Okay, which is an important provision. Let's take this Maruti case law. What did Maruti do? Payment made to a non-resident outside India. So, let us take a non-resident is conducting an exhibition outside India. Indian company participates in that exhibition. The exhibition is conducted outside India. Indian company, this is the same for Viscraft International also. They conduct exhibition outside India. Indian company is participating in that. Okay. NR does not have PE in India. So don't deduct tax. Income for me never accrues from India. I did not conduct the exhibition in India. I am conducting it in Germany. You, the Indian company, want to participate, come there and participate, pay me. So, no TDS. This is the judgment. I am going to the preliminary. Maruti contents no TDS. Tax need not be deducted at source. Maruti contents no TDS. That is, tax need not be deducted. You know the unfortunate fact is appeal can be made only after deducting and remitting the tax. The truth is no TDS. TDS is not applicable for this transaction. This appeal can be made only if tax is deducted and remitted. This appeal can be made only if tax is deducted and remitted. Appeal won by the assessee. So assessee wins the appeal. The tax deducted and remitted will be refunded. Whoever bears it. Maruti deducts it, but it does not deduct it from the foreigner to Maruti. Maruti has deducted it from the non-resident to the non-resident, it will be refunded. Okay, TDS appeal alone, other appeals you can go for a stay of the tax amount. TDS appeal alone, assessee makes an application to AO for knowing the liability to deduct tax for non-resident. AO specifies tax has to be deducted at source. Assessee contends that tax need not be deducted at source, so he prefers an appeal to the Commissioner Appeals. Such an appeal can be preferred only if due taxes are deducted and remitted. Where later assessee favorable judgment is pronounced, the tax deducted will be refunded either to the assessee if he has bonded or to the non-resident if he has the other person has bonded. Okay, where later assessee favorable judgment is pronounced, tax deducted will be either refunded to the assessee if the assessee has bonded or to the non-resident if the non-resident has bonded tax. Okay, so remember this, even in faceless, this is the procedure. Mode of appealing: within 30 days after payment of a fees, you can appeal. Delay can be condoned if there is sufficient reasons. Okay. Content of the appeal: assessment order passed by the AO, what objection you have, and what are all your grounds of objection. You relied on this case law or you relied on this interpretation, whatever it is. This is important. Should demand that tax be paid? Where you have accepted some income, on that you should have paid the tax. Only on the disputed income you can go for a stay order. I declared an income of 10 lakhs and filed my return without deducting tax, without paying the tax. The assessing officer disallowed another 5 lakhs and makes it 15 lakhs. I am disputing that 5 lakhs. I am saying this is not allowed. Can I go for a stay order for the entire 15 lakhs? No. 10 lakhs you accepted it as income, where assessee has filed this income, admitted income, then tax on such admitted income should be paid before going for appeal. On the additional demand rights which is disputed, he can say, please give me a stay order. AO shall grant the stay order, and CIT is also having a power, inherent power to grant stay order. Procedure for hearing, this has changed. We will see it in faceless assessment. Okay, now it is appeal unit, review unit, so many things are there. When we see tomorrow morning, we will see the procedure. It is not the same, it has changed. What is important here is this. Can additional evidence be produced? I will also discuss that in faceless appeal. Second appellate authority is ITAT, where both assessee and department can go. Aggrieved party. CIT, Commissioner Income Tax, gives an assessee favorable judgment. Who is the aggrieved party now? Department. Department can also go on and any order passed by Commissioner of Income Tax can also be an order passed by DRP. All these things will directly go to ITAT. Who can appeal? The aggrieved party. Appeal within 60 days after paying sufficient fees and all, appeal has to be made. ITA, okay? This appeal as a procedure, my dear friends. Whoever is the aggrieved party will file an appeal. We call it as objection. Please listen. We call it as objection. So, ITAT will send that objection to the other party. ITAT will send that objection to the other party saying, see, he has objected. At this level itself, close it if you are okay with the objection. The other party will file what is popularly known as memorandum of cross objection. What the aggrieved party files is objection. I will send the objection to the other party, and the other party will file what is popularly known as memorandum of cross objection. And then the case will go on. Appeal has to be made within 60 days after paying necessary fees. Appeal should be filed specifying the ground. This is known as objection. ITAT shall send the ground of appeal to the other party and seek memorandum of cross objection. This should be within 30 days from ITAT. ITAT may dispose of after receiving memorandum of cross objection. Where ITAT proceeds, then they shall fix the time of hearing. Should demanded tax be paid? My dear friends, should demanded tax be paid? This is the mistake I did. I wrongly pasted it here. Should tax be paid, preferring an appeal again? It's an amendment. I want you to have it in your mind. It's an amendment not questioned in July. Should tax be paid before preferring an appeal with ITAT? At least 20% should be paid. Or give bank guarantee. Or give at least a guarantee, furnish a guarantee. For the balance, you can take a stay up to 180 days. For a balance, you can take a stay up to 180 days. What happens beyond 180 days? You can ask for extension of stay period. On an application being made, ITAT may extend the stay period by further 185 days. The total period of stay is 365. The total maximum stay period is 365. The maximum stay period is 365. 180 days plus 185. 20% pay initially or furnished guarantee. For the balance, 80% go for 180 days initially, and it can be extended maximum by another 185 days, totally 365 days. Within 365 days, the case is not over. Pay the tax. As per law, maximum is 365 days. Beyond 365 days, you are liable to pay the tax. What if the delay is not due to me? What if the delay is not due to the assessee? Then also he should pay. Going as per law seems to be yes, thanks to a very recent case law. When I say recent case law, it is in the judicial pronouncement released for November 21. The 3-4 case laws are released there. We will discuss those. Okay, in that it is there, so the possibility of the question all the more increases. The possibility of a question increases thanks to Pepsi case law now. Thanks to Pepsi case law now, my dear friends. Pepsi Foods Limited. Possibility of case law is more because this is judicial pronouncement released the automatic vacation of stay upon 365 days, where the delay is not attributable to the assessee. Assessee has not delayed. Whenever you called, I have come. It is only department which is taking the vaida. It is only department which is prolonging, not my mistake. Should I still pay? Normally, yes. But thanks to the Supreme Court judgment, Section 245 specifies that where an appeal is filed before ITAT is not disposed of within specified period or such extended period, then the stay shall stand vacated at the end of 365 days, even if the delay is not attributable to the assessee. This is what section held by Supreme Court. The words even that is appearing here, no, and not has to be ignored. Even, don't read it as even, don't read it as. Hence, any order of stay will stand vacated at the end of 365 days only if the disposing of as a appeal is due to the action of the assessee. If the delay is due to the assessee, then only 365-day period. Otherwise, if it is not due to assessee, if it is due to department, continue the stay. Supreme Court judgment now. Supreme Court judgment now. So, my dear friends, possibility, recent November 21 judicial pronouncement case. Like this, there is something in TDS also, I will check. we will study. Okay, but there is a possibility of question increases when it is a Supreme Court judgment. Okay, so please, amendment is also there, Supreme Court judgment is also there. Remember it for a questionable area. Okay, right? Coming back. Administrative provision, it should be a written order served. Recommendatory time limit is 4 years. Power to rectify 254. 154 is rectification by the assessing officer plus 100. 254 rectification by ITAT for any mistake apparent, that is they have not considered a judgment or they have not considered a notification within 6 months from the end of the month in which the order is passed. Within 6 months from the end of the month in which order is passed, rectification can be made, but give the opportunity. Okay, again and again the court is saying only the power to revise, not review. Only the power to, I wrongly passed an order, mistake apparent on record, I want to rectify. Allowed. I think I went through the argument very wrongly. Start again arguing the case. Not allowed. Only revision, not review. Review means from the beginning. Revision means that particular aspect. Rectifying a mistake is possible. I think the entire order is wrong. Let us do one thing. Let us start the case again. What's your argument? What's your... Only power to rectify, no power to review. Okay? I told you about this. Appeal to High Court and Supreme Court. An aggrieved party within 120 days. Only question of law can be appealed and then it leaves to the High Court. Okay? When a similar matter is pending, when a similar matter is pending with an appellate authority, Supreme Court, when a similar matter is pending, okay, why should I year on year go on appeal, etc.? So in order to avoid repetitive appeal, both me and the assessing officer will understand. See, a similar matter is pending with the Supreme Court. Let us not go on disputing it. Whatever decision that given in that case, apply to me also. I write and give, assessing officer also writes and give. So let's keep the case pending till the final order in that case comes. Provision for avoiding repetitive appeal by assessee 158A, 158AA, repetitive appeals by assessing officer, department. They will say, look, a similar matter is pending. A similar question is pending with the Supreme Court. Whatever order I pass now will become a mistake. Why? If I pass the order, you will again go to CIT appeals, ITAT. Why? Both of us will understand. Whatever decision in that case, we will apply in this also, so that this repetitive appeal is stopped. Okay? 158A is for assessee, 158A is for department. Okay. Some of the case laws pertaining to appeals, reviews, one we saw, other things, two we saw. Fortaleza developers. This is a case where I want to deny, that is the assessing officer want to deny section 80 IB as he felt that the association, that the institution, that the entity is a AOP. court asked, what? Even let it be a AOP, they can claim 80 IB. Why do you want to disallow? If your question is quantum of deduction under 80 IB will depend upon the income earned from the project. The quantum of deduction will not be based upon the distribution amongst the members. Also, the deduction is available to an undertaking and not to an whether it is AOP, etc. and all. So, you can claim. Okay. The question about the undertaking will not change the character. It will be claimed. Doctrine of merger, we saw. This is also similar to doctrine of merger. The original assessment order under 143.3, which was subsequently modified under 264, can it be again taken under 263? I told you 264 order can be amended in 263, but 263 order cannot be. The High Court took note of the sequence of events and undisputed that the original assessment order passed by the assessing officer was no longer in existence. The High Court accordingly held that the order passed by the Commissioner under 263 revising a non-existing order is ab initio. Okay, this is once you pass an order under section 264, this order is no more there, so you cannot rectify. Sorry, I understood the mistake. Once an order is passed under 264, once an order is passed under 264 is complete merger. 148, 154, 263 partial merger, 264 complete merger. So the old order is no more there, you cannot rectify it. Leave such software, not at all important. TV brokers, whether additional evidence can be produced, the answer is yes. I will talk about it later also. Yes, you can. Rehum Foundation, okay. I thought last time in the old syllabus the question came. Can the appellate tribunal in a matter under 12AA where the registration is denied by the commissioner pass an order directing the commissioner to grant registration? Can the ITAT say grant registration? Actually, yes. ITAT can pass any order as they deem fit. ITAT can pass any order as they deem fit. So they can say, give it. But High Court says, be careful. You can, no doubt, but be careful. The High Court held that the appellate tribunal in a matter where registration under 12A has been denied can itself pass an order, directing the CIT to grant registration. No doubt. Only in the case where the tribunal disagrees with the opinion of CIT as regards the genuineness of the activities on the basis of material already on record. It says, be careful. However, the said power is not to be exercised by the ITAT as a matter of course of remand to the CIT. Where, okay, let the matter be going back to CIT where the ITAT records a divergent view on the basis of material which has been read. Okay, you can do it. No doubt you can pass an order, but wherever you have a different material, okay, remand the matter back to CIT because he might be able to investigate more and instigate more or look into more. So, advisory judgment also it is. And the appellate tribunal dismiss an appeal without deciding the case on its merit solely on the ground assessee has not appeared on the specified date. So I will decide it. Not possible, friends. Not possible. In view of the decided case laws and clear provision, High Court set aside the order of the tribunal dismissing the assessee's appeal due to non-appearance and directed it to decide the appeal on the basis of law. No egos, only law is superior. This company denied 115 QA buyback of shares. The quantification, it says I need to pay tax, I accept, but the methodology of computation was denied. Is appellate remedy by way of appeal before commissioner under 246A available to a company denying its liability to pay additional income tax of 20% on buyback? Supreme Court held that any determination, be it regarding quantification of the liability or question whether the company is liable to pay or not, will fall within the first limitation. The wordings of the law is an order against the assessee where the assessee denies his liability to be assessed under the Act. The computation and extent of liability determined under the provisions of section 150 buyback would squarely get covered. Accordingly, appeal should be maintained. The assessee, the commissioner said it is not at all appealable. Okay? You cannot question it. It can be questioned. There is a liability, it can be questioned, is the judgment. See, folks, I covered. Okay? Now comes to review versus rectification. What did I say? Rectification means only that matter. Review means from the beginning. Okay? Earnest exports. High Court observed that the power under 254 is limited to rectification of a mistake. Is limited to rectification of a mistake apparent on the record. Therefore, the tribunal must restrict itself for that. Section 254 is not a carte blanche for the tribunal to keep on changing its view by substituting its view. Okay? Okay, so you cannot keep on changing. It is only rectification. Okay, not review. But can High Court review it? Okay, don't look into all these things. Okay, can High Court review it? Now there is a specific case law for this. Sunil Vasudeva and others, where the Supreme Court has given guidelines. Circumstances where High Court can review. Review means from the beginning. Discovery of new and important matter of evidence, which after the exercise of due diligence was not within the knowledge of the petitioner and could not be produced. Mistake apparent. Any other sufficient reason. What cannot be reviewed? Repetition of old and overruled arguments. Minor mistakes. Okay. Further they said, observation made by Supreme Court in entertaining a review application when you can. Review proceedings cannot be equated with original hearing. Original hearing is over. Don't again try to. A review is not maintainable unless a material error is there on the face and the old judgment is not so sound. A review should not be an appeal in disguise. It should not start the process again, whereby an erroneous decision is reheard and corrected but lies only for patent error. The mere possibility of two views cannot be the reason for it. The error apparent on the face of record should not be an error which has to be fished out and searched. The error should be apparent on the face and it should not be interpretation. The appreciation of evidence on record is fully within the domain of the appellate. It cannot be advanced further. Okay. So, this case law, remember, because lot of guidelines are given, put it in simple ways and keep it to you so that you will review. Because Megalia Steels is a slightly old case. Okay, does the High Court have an inherent power under the Income Tax Act to review? The Supreme Court concurred that High Court being courts of records under 215 of the Constitution, the power to review will be inherent in them. Okay, so it is an inherent power. That is what Supreme Court has been saying in two different cases. But now this case law, again a Supreme Court case law, so where there is more clarity. Okay, is it mandatory for question of law only to enter? Yes. Otherwise, the case will be remanded back for fresh hearing. High Court must record the fact that the question involved is law. Okay, right. With this, we complete the appeal part of this aspect also. With this, we complete the appeal part. The last part of this assessment procedure, apart from faceless assessment. Before that, remember Pepsi case? Faceless appeal might be a question, rarely other parts will be a question, but remember Pepsi case, remember Sunil Vasudeva case. Apart from that, appeals, revision, yes, there is a possibility of question, but should not take more than 15 minutes to revise. Okay. Now we walk into penalty. The last arena of our focus is now penalties. The last arena of our focus is now penalties. I don't know how to. I don't know how I missed the questions on penalty in the material. Okay, one mistake. I will definitely send the questions if you want separately, but I missed out the questions. I was yesterday searching for the questions. There should have been a practical aspect also, but unfortunately it got missed out. So I'm going to take up some questions and answer for you. Okay, don't worry about that extra time you will be spending. Please have your notebook, pen, calculators ready. We are going to work out questions also. Penalties. Section 270A. That section which is most question. Somebody has that doubt. Okay, lot of doubt. I will go by it. The assessment of S Limited was completed under section 143(3) of the Income Tax Act with an additional income of 23 lakhs to the returned income. The assessee company preferred an appeal before the Commissioner of Appeals, which is pending now. Can the Commissioner makes revision under 263 both in respect of matters covered in the appeal and other matters? Can assessee seek revision under on matter which has gone for an appeal? The regular Commissioner cannot make a revision, rectification, revision. Nothing can be made on a matter which has been gone on an appeal. On matters which has not been appealed, on matters which has not gone on an appeal, you can make the rectification or the revision. Again, I am telling you, assessment order can be split into parts. On some parts, they would have gone for an appeal. For those parts, you cannot rectify under 154 or revise under 263. For other parts for which you have not gone on appeal, you can do so. But assessee has only one option. He has to either choose 264 or appeal. If he chooses 264, appeal gates is closed completely. I don't understand the mat question mark. Rishabh has asked this question. Margaret, can you give me, Rose, can you give me a little about what is that mat in the question mark? From Burma, Gar. I don't. From Bishop, a discretionary trust is liable to a MMR of income tax on their entire income, or no, on their entire income. On their entire income. Actually, I've asked. Okay, Rose has said, nothing, sir. It was a question raised by one of our friend. I just replied. Okay. And from Burma, actually, I've asked for whether GAR is over, sir. Yeah, GAR is over. And we saw, no? The provision of 95 base provision, 96, 97, and then followed by assessment under 144B, where it can be made by the approving panel. Okay, that is the GAR. That is enough. That is sufficient for you. Okay. Now, amongst the popular penalties are section 270A and 270AA. Okay, thank you. No time, no problem. Okay. So 270A is the major provision, which is penalty for underreporting of income and misreporting of income. Penalty for underreporting of income and misreporting of income. First, let me tell you what is misreporting. One more question. What will the order in which movable and immovable property shall be realized for recovery of tax by recovery? What will the order means? Can you clarify the question, Rishabh? Priority of the order. Liquidity wise, first the cash will be used, then only movable properties will be used like jewelry, etc. Finally, only immovable property on recovery of tax. First, let me talk about misreporting of income. Okay, what is this? Okay, and don't hold your heart and feel bad. This is what misreporting. Okay, suppression of fact, which you all don't know, I accept. Failure to record an investment, naturally. Claiming of expenditure without vouchers, which are unable to be substantiated. Recording false entry in the books of accounts. Okay, don't leave the course and go. Wait. Failure to record any receipt in the books of accounts which has an income impact. Failure to report an international transaction are deemed international transaction under section 10. Chapter 10 the GAR. Our friend was also asking. Misrepresentation or suppression of fact, failure to record investment, claim of expenditure which are unable to be substantiated, recording of false entry, all these things tantamount to misreporting. The penalty is 50% of tax payable for underreporting, twice the tax payable, 200% of tax payable for misreporting. Okay, okay, that is the penalty for underreporting and misreporting. Okay, right? So all of us, we quickly take some examples also and work. Okay, question number 1. Income of a company declared under section 139, 40 lakhs, declared in intimation under 143 subsection 1, 50 lakhs, determined in assessment under 143 subsection 3, 64 lakhs, rate of tax 25%, determine penalty. Determine penalty. Okay, all of us first have to understand something. Keep writing the question and we'll also write the answers. Okay, right. All of us first has to understand what is underreported or misreported income. You declared voluntarily 40 lakhs. Prima facie adjustment was made by the computer and sent to you, which comes to 50 lakhs. And assessment, the law gives us a big relief. Only the difference between these two is underreporting. It is not returned voluntarily. Where return is filed, income assessed is greater than what is determined under 143(1), not 139. Where, okay, income assessed is greater than prima facie adjustment, that is only regarded as underreporting or misreporting. Okay, 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 right, fine. Solution. I am very clear. You have to work out the solution like this only. Tax for income determined under 143 subsection 3. Tax for income determined under 143 subsection 3. That is, the income determined is 64 lakhs. Base tax at the rate of 25%. And HEC at the rate of 4%. Tax for income determined under 143(1), 50 lakhs. 50 lakhs. Okay? 50 lakhs. Difference. Difference. 3,64,000. If under-reporting, penalty is 50% of difference in tax. If misreporting, in exam, if they have not given under-reporting, give two answers. If misreporting, penalty is 200% of difference in tax. Sir, can I do directly for 14 lakhs? Because the same answer will only come. Sir, please don't do that, my dear friends. My dear friends, please don't do that. Sometimes here surcharge will come, here it will not come. If it is individual, which I will work out next, it will be different. Always first work out as per assessment. As per 143(1). If the above information is for an individual, it is not for a company. If the above information is for an individual, how will our working change? If the above information is for an individual, how will the working change? Tax for income determined under 143 subsection 3. How much is the income determined under 143 subsection 3? 64 lakhs. Is tax. We all know how to compute. This minus 10 lakhs into 30% plus 1,12,500. 54 lakhs into 30% plus 1,12,500. And surcharge at the rate of 10%. And HEC at the rate of 4%. So in this case, this is the best methodology to work. Always work this and then go for the next level. Step 2, tax on income determined under 143 subsection 1, which is 50 lakhs. Base tax, okay, 50 lakhs minus 10 lakhs into 30% plus 1,12,500 and HEC only, because for an individual surcharge will come only if it exceeds 50 lakhs. So here you cannot put 14 lakhs into 30% or something. So always work out. First as per 143.3, then as per 143.1. What is that? Is the screen stuck? No, actually it is not stuck, I believe, friends. So please always remember to work out like this in exam also. In sir, I'll do the difference. It will not always work out. In exam, let's take the caution. In the previous case, it might have worked out, but caution always better. So please take it. Okay. Right. Question number 3. Company taxable at 25%. Income return, that is as per return of income, okay, 71 lakhs. Income confirmed under 143 subsection 1, 80 lakhs. Income assessed under 143 subsection 3, 96 lakhs. Income assessed under 147, okay, 1 crore 10 lakhs. Okay, so compute penalty at various levels. First assessment is the difference between these two things. Next assessment level, difference between these two. Up to this, you have already levied penalty. These two things. Theoretically speaking, I'll come back to it, don't worry. In case of reassessment, income assessed is greater than income assessed before that. So income assessed greater than income assessed. But remember, their surcharge will come at 7%. work it in different fashion. Okay. Particulars 143 subsection 3, 143 subsection 1, which is saving time. Okay. Income determined 96 lakhs, 80 lakhs. Tax at 25%. And HGC at 4%. Total tax. Difference if underreporting, if misreporting, minus what has been already, sorry friends. Okay. This is minus already determined tax in 143.3. Okay. Difference between second assessment, that is which we did under 147, and first assessment, that is which is under 143 subsection 3. Yeah. Okay. Individual has not filed his return of income. So there will not be any 143(1) at all. Assessment will be completed under 144. Best judgment assessment. Assessment completed under 144. Best judgment assessment determining income of 26 lakhs, for example. Compute penalty. So far, we have been seeing a case where I find a difference because you have filed and there is a 140. When you have not filed your return, where return is not filed, income is greater than basic exemption tax. Okay? Solution. Income 26 lakhs. Base tax 26 lakhs minus 10 lakhs into 30% plus 112,500. 16 lakhs into 30% plus 112,500 and HEC at the rate of 4%. So it will be okay. Total tax becomes the difference. The total tax becomes the difference. That is this entire 6 lakh 16,200. Where income is not filed for all others right from rupee 1. For individuals alone, up to 250, anyhow you will not tax more than that. Loss only. Returned loss 7 lakhs. 143(1) it is now, sorry, returned loss 8 lakhs. 143(1) 7 lakhs. Whereas in assessment, the losses. Why should the loss reduce? Because an income is suppressed. or an expenditure is excess claimed, a loss reduces when the income is suppressed or expenses are overclaimed. Of course, no taxes payable, but penalty is leviable. How to compute the penalty? Take the absolute value, says the law. If in case of reduction or loss or conversion of loss into income, absolute value should be taken. It is not the difference here. It is what is the absolute loss that should be taken. Okay. Okay. Right. Solution. A total reduction in loss. Total reduction in loss, which to be taken as absolute value, it is 6 lakhs. Minus 7 lakhs becomes 1 lakh. Minus 7 lakhs becomes 1 lakh. So absolute value to be taken. For 6 lakhs, what is the tax? That needs to be computed. And so far we have been seeing a case where tax is also payable, penalty is also payable. So far we have been seeing a case where tax is also payable, penalty is also payable. Here is a unique case. Tax is not payable, only penalty is payable. Because I take the loss in absolute values. Rumba vega, we have done like this. Absolute values should be taken, ignoring the symbol in front of it. The accounting standard segmental reporting, I think so, it will come absolute value take. Okay. So if it is a company or if it is an individual. Base tax, company, I assume it to be 25%. Okay. So 6 lakhs into 25%. For individual, 6 lakhs minus 5 lakhs into 20% plus 12,500. That is 5 lakh, 1 lakh into 20% plus 12,500. And HEC at 4%. So, tax on which penalty will be computed. This is not, nowhere I'm saying you are liable to pay this tax. It's a loss only. But a tax on which penalty will be computed. same question only I'm going to rework with some other extra, that is, it becomes, let us take 3 lakhs income. Okay, income determined under 143 3, because the look at the provision, if in case of reduction of loss or conversion of loss into income, here also it is difference between 7 lakhs minus and 3 lakhs positive, so it will become 10 lakhs. It will become 10 lakhs. The same answer only. The mode of computation is the same only, but with the difference that it will become 10 lakhs. The absolute value will be minus 7. So 7 plus, so income subsumed or income suppressed is 10 lakhs. You will write test, especially objective types on all these things. Leave it to me. We will be writing objective types on all these things. More concentration. More concentration. Company taxable at 30%, for example. Particulars, normal 115A. I'm again and again not writing this income returned and all. We all now know that income returned, income returned is not relevant. 143.1 is relevant. If 143.1 is not relevant, not there, income return will take. Determined under 143 subsection 1. Okay, 41 lakhs, 5 lakhs. Determined under 143 subsection 3. Okay, 51 lakhs. Okay, 90 lakhs, for example. Where Underreported income arises out of total income in accordance with 115 JB or JC. A minus B plus C minus D. A, tax on, everywhere tax only, okay? Tax on total income assessed as per normal provision. B, okay, under B minus A, underreported income. C, tax on total income, okay, D is minus C or is equal to, where underreported income is considered, okay, that I will come to, okay, A minus B plus C minus D. A, tax on 143.3. I will put directly 31.2%. We all know this is, okay, for example, 30 plus 30 into 4. So this becomes 31.20. Here it will be 15 plus 15 into 4%. Okay, here this will be 15.60%. B, tax on 143 subsection 1. C, tax on book profit determined under 143 subsection 3 into 15.60%. Tax on book profit determined under 143 subsection 1, 65 lakhs to 15.60 percentage. A minus B. C minus D. Total. Okay. Total is nothing but A minus B plus C minus D. You have underreported something in the normal computation. You have underreported something in your 115 JB. Your total underreporting will be taken and penalty will be levied. C minus D is 3,90,000. Sorry. Yeah, stand corrected. Thanks for one other question. I'll answer it later. I got 3,12,000 because of this. Complete this, I'll go to the next case. Very, very intricate case. Next case. Very intricate. You need to concentrate. Rupees 5 lakhs worth of adjustment is done both in normal and in 115 JE. This increase of 41 to 51, 65 to 90 is not because of two different items. 5 lakh worth of items I have increased in both the places. Should I pay two? Can you please mute your mic? Santo, mute your mic, Santo, please. 5 lakhs worth of adjustment is made both in normal as well as 115J. Should I pay two penalties for the same adjustment? Not fair. If it is different adjustment, yes. 5 lakh worth of provision for subsidiaries loss, I should have added up in both the places. But unfortunately, I have not added up both the places. Now the assessing officer adds it up. Now the assessing officer adds it up. Should I make the adjustment in both the places? The answer is no. That is not fair. Where underreported income is considered both under normal as well as MAT or AMT, then where will the law get maximum benefit if you pay 31.2, not if you paid 15.6? So what the law says is, can you please mute your mic? Okay, what the law says is, okay, 51 lakh into 31.2, 41 lakh into 31.2. Okay, here they say, okay, sorry. Okay, here they say, here, look at here, they say, plus 5 lakhs. You increase your this income by 5 lakhs. then the reduction shall not be made in T. We all know A, B, C, D. We all know A. Tax on 143.3, tax on 143.1. Tax on 140, the book profit. Here, it will not be a book profit of 65 lakh because I have already made the adjustment here. So I will increase that 65 lakhs to by 5 lakhs. I will make it at 70 lakhs. This 65 lakhs will become 70 lakhs and I will compute 70 lakhs into 15.6%. Okay, right? I am writing theoretically. Note where an adjustment is made both under normal as well as 115 JB, then such adjustment should be added to T. Such adjustment should be added to T. That is, ensure that the adjustment is added to T and then tax is computed. Lakhs plus common adjustment, that is 5 lakhs. Remember, this is A, this is B, this is C, this is D. It will be adjusted in D means that 65 lakhs will be added up by 5 lakhs. In other words, 90 minus 65, 25 lakhs minus 5 lakhs. Here, as per law, I have written here as per law, but this is the better way I worked out. A is total income. B minus A is equal to underreported income. 51 minus 41. But when you work out tax, suppose if surcharge is coming, you will miss it out. That's why I have taken this method. Okay, and that adjustment is.
Could you please
Can you please repeat your question?
show the note cell?
Yeah, sure. Okay, one more time we will work out to have a clarity because I wish to give you this clarity. If at all there is a question, we are not missing this out. Question number 9. Is there a question for me? Question number 9. Please understand. Okay, this time I'm going to take up a question I work out. Okay, normal profit as per 143.3. Okay, let's take 75 lakhs. Normal profit as per 139 and 143.1, both are same. Let us take some 50 lakhs. Profit as per, okay, 115 JB, 143.3. Let me take it as some 90 lakhs. Book profit as per 143.1. Okay, let us take it as some 70 lakhs. Rupees 10 lakhs worth of adjustment is made during assessment, both in normal and in book profit. Compute penalty. This is 70 lakhs, 70. Solution. Please understand the solution. I'm going little slow. Some question is there. Yeah. In question number 5, it is given income determined and the answer will still there. Yeah, yeah, yeah. 143.1 is prima facie adjustment. A, B, C, D. That too. 143.1 means prima facie adjustment. Okay. A. Okay. Normal uh, income under assessment and its tax. So what is the normal income under assessment? 75 lakhs. Let me take the tax as 31.20 percentage. 31.20 percentage. I will take the tax as 31.20 percentage. Okay. So 75 lakhs into 31.20 percentage. Normal income under 143 subsection 1 and its tax. So which is nothing but 50 lakhs and its tax is 50 lakhs into this one. Tax difference of A and B. Nothing but A minus B. For book profit, we have to take 15 plus 15 into 4%. So somewhere around 15.60%. C. Book profit determined on assessment 90 lakhs. On that, I computed tax of 50 16.60%. Book profit determined, okay, determined under 143(1) plus plus common adjustment. So it will be 70 lakhs plus 10 lakhs. It will be 70 lakhs plus 10 lakhs common adjustment. So 70 lakhs plus 10 lakhs on that time. Tax difference of C and D, nothing but C minus difference 1 plus difference 2. Let me call this as difference 1. Let me call it as difference 2. Difference 1 plus difference 2. A minus B plus C minus D. And we know what is the penalty. Whenever there is a common adjustment, please add it to the last. So common adjustment should be it in AMT or MAT, it should be treated like this. Might be rare, not yet questioned, but 270A is a popular question. When penalty cannot be levied, okay, where the assessee offers satisfactory explanation and all material facts are provided, where AO determines the total income on the basis of estimate, but it is identified that accounts are complete, but traveling expenses, I have charged in the P&L some 2.5 crores. Agreed addition, that's what we always call this as. Okay, there is a concept in our law, we call it as agreed addition. Okay, both AO and assessee agrees. That is known as agreed addition. It's not determined on any scientific basis. AO has his target. Assessee want to buy piece. Why to a daily? Okay, 10 lakhs, you add it up. Okay. So there is no scientific basis. Total income on a basis of an estimate, but it is identified that the accounts are current, but the method employed in such income cannot be properly. Where assessee has made addition on an estimated basis, disclosed all material facts. Where additions are made in conformity with the arm's length price determined by TPO, and the assessee has maintained all information and document, declared the transaction, etc. Okay, and where penalty is for raid cases, search and seizure cases, that has separate penalty. So here it is. Immunity can be granted nowadays by the assessing officer itself. Assessee can file for immunity. Don't put penalty. Today this is acceptable to the assessing officer. Can be made if the assessee has paid the taxes, the normal taxes and interest, and file an immunity petition. Don't go for an appeal. Assessee has to make such an application within 1 month. AO shall not grant immunity for misreporting. Misreporting is a serious offense, no question. In case of underreporting, okay, he can accept the immunity petition. Majority of the time, I believe it is accepted. Penalty for 60% of under, this is raid cases. The erstwhile section says 30 to 60%. Now it is 60% of underreported income. You will get the penalty. Draconian provision which will make you to go out of CA. Penalty for false entry in the books of accounts. False entry in the books of accounts. Amendment. Why it cannot be questioned is, it blames the CA for this, but since it is an amendment, it can be a question. During the proceedings, if it is identified that false entry or omission of any entry is made or not made in the books, omission, and such entry or omission has resulted in tax evasion, then AO shall levy penalty aggregate amount of false entry, not tax, aggregate amount, totally 25 lakhs, false entry made, 25 lakhs is the penalty. Penalty shall also be levied on any other person who causes such person to make such false entry or cause to omit that entry. About us only there. Penalty shall also be levied on any other person who causes such person in any manner to make the false entry. False entry include forged or falsified documents like false invoice, or in general a false document. Invoices in respect of supply of goods is issued by another person without actual supply accommodation. Invoice in respect of supply or receipts of goods or from a person who does not exist at all. Okay, amendment, my dear friends, please be clear about it. We have seen the TP things in this. Otherwise, for non-maintenance of books, 25,000. It is better not to maintain books than to not to get audited. Okay. Non-audit for 0.5% or 1,50,000, whichever is less. That is higher. So better not maintain books. Okay. Failure to deduct tax at source, sum equal to the amount of tax which he has failed to deduct. which is high only by JCIT. Similarly for TCS. Similarly for TCS. My God. AO has come to know from the investigation wing of the department that Mr. X has not disclosed acquisition of land of 5 lakhs in the books of accounts maintained by him for his business. What is the time limit for issuing notice under 148? Should AO take prior approval of any superior income tax authority before issuing such notice? In case Mr. X is an agent of a non-resident and the transaction, the purchase of land occurred in 1011, would your answer be different? Okay. uh, 148, what is the value? 5 lakhs. Up to 6 years you can issue the notice. Up to 6 years carrier. Okay. Should AO take the prior approval of IT authorities? If the AO has already completed the assessment and now he is reassessing, then yes to the JCIT, etc. If Mr. X is a non-resident foreign, 16 years is that time. 16 years is that time. Okay. 16 years is the time limit for okay. Otherwise, please go through once. Don't again testing the memory power. I will test the memory power in the exams I keep. Okay, I will test the memory power. This is the new addition we just saw. Okay, 270A and 270AA TDS related penalties. Please read it once. Okay, that might be important for us. That might be important for us. The next is miscellaneous provisions, 269 SS, T and related things. Accepting loans, deposits and similar sum in aggregate. Accepting. This is about accepting. You should not accept. No person shall take or accept any loan or deposit except by approved modes. Up to 20,000, it can be in approved modes. It is aggregate. It is not every year 20,000. Aggregate. Up to 20,000 means not only the received amount plus the already interest outstanding should not exceed 20,000. Okay. Watson receives a loan from Preeti. Okay. The loan value is 15,000 in cash. No penalty. Last year, Watson has received a loan from Preeti for 10,000. This year, another 15,000 by cash. Penalty applicable. The loan outstanding is 10,000. Now I am getting another 15,000. Penalty will be 15,000. 269 yeses. The loan outstanding is 10,000. Now I cannot get more than another 10,000 otherwise than by approved modes. If I receive 100% where there is violation, 100% of the amount received by unapproved modes will be my penalty. Imagine a circumstance that this I received only by DD, account pay, check, account pay draft. Now I am receiving by cash. Still penalty will be levied. At the time of exceeding 20,000, I am making a violation. Still penalty will be levied. Still penalty will be levied because I have violated. I'm not supposed to, I have violated. 269, cashless economy. No person, especially we are talking about jewelers, mainly jewelers, for them this provision, and some car dealers, some high net worth, not for a local provision stores and all. No person can receive any amount in respect of in excess of 2 lakhs except by approved modes. Imagine, I am running a jewelry store. Our friend Anju is coming and buying from me jewelry worth 1,50,000. No problem, pay by cash. Jewelry worth 2,50,000. You can only pay me by approved modes. If I get cash, I am only taxable. I make two invoices, 1,50,000 one invoice, 1 lakh one invoice. Then too it is taxable because it is same transaction. I get 1,50,000 today, 1 lakh tomorrow, then too taxable. It is for the same transaction. The term transaction means aggregate of all payment made on the same day, aggregate of all payment made on different dates for the same purchase, aggregate of all payment for the same transaction. Entire 250 becomes a penalty. NBFC, there is a relief. So suppose if somebody has not paid 20 installments and they are now collecting all the 20 installments together, per installment is 50,000. All the 20 installments together makes it 10 lakhs, no problem. CBDT notification gives relief to NBFC. The limit is per installment and not the. So per installment, it should not exceed 2 lakhs. The third provision is to ensure that people are using RuPay and government-oriented apps, acceptance of payment through prescribed modes. Even though you might have Paytm, even though you might have Google Pay, applicable for assessees whose turnover in the immediate preceding year, 1920, exceeds 50 crores. These entities should give any one of the payment option, RuPay, BMAP, UPI. Otherwise, penalty is 5,000 per day of violation. The last one is for the banks and other things, or even for individuals. Repayment of loan. Where the outstanding liability exceeds 20,000. When I say outstanding liability, it means principal plus interest. Repayment should be only by approved modes. Otherwise, 100% of unapproved mode will be the penalty. When I say outstanding liability, it is principal plus interest. I told you somewhere, when you remember, Venkateshwara case law, partner brings in capital to the firm. Firm is asked to explain the source. Firm says partner. Partner's source is unexplained. So the assessing officer proceeded against the firm. The court said, no, you can only proceed against the partner because partner and firm are two different persons. I told you at that time there will be a contradictory case law, Muthoot Financials. And loan or deposit received from partners In R.M. Chidambaram Pillai case, it was held by the Supreme Court that firm is a collective noun. In yet another case, Lokpath Film Exchange, it was held that a partnership firm not being a juristic person, the interstate transaction between partners and firms are not covered under 269SS or 269T. The creditworthiness of the partners and genuineness of the transaction coupled with relationship, okay, between the two person and two different legal put forward constitute a reasonable. If a recent case law also, Sivakumar, loan advanced by a firm to the sole proprietary concern of which the partners. High Court relying upon the various judgment upheld that there is no separate entity for the firm and that of the partner. So no penalty. Okay, contradictory thing, but yeah, it is very popular. Passing book entries. Will it mean violation? No, it is not violation, provided you have proved that it is to the satisfaction. Can penalty be levied for both non-maintenance of book as well as not getting them audited? Only for non-maintenance of books. That's why he said if you don't maintain books, if you don't get audited, don't even maintain books. Only one penalty can be levied. Okay, in that Muthoot Financial, Sivakumar, please be clear. Other things I don't think so. 269, but have a read through of this topic also. Have a read through of this topic also. Okay, this brings us to the end of all types of assessment. This brings us. Okay, I have answered that. What is the name? Two brothers, DJ and PC, inherited lands equally, consequent to the demise of their father. Subsequently, those lands are compulsorily acquired by SG. Both DJ and PC received enhanced compensation and interest. They admitted that the income in their now the AO wants the associate income from compulsory acquisition of land as AOP. No, it is not justified. Where the income is determined, we will see that case law in assessment of individual also, where the income, and we have seen in that Plinth case law also, where there is a clear demarcation whose income is what. It cannot be what I would say taxed as AOP. It will be taxed in their independent hands. So remember these things. Okay, the next is what is now pending. Assessment of faceless assessment, faceless appeal, assessment of individual and TDS. Okay, I think today evening it is little difficult to meet today evening. So let's meet tomorrow morning at 6 o'clock. Tomorrow I will extend. Tomorrow evening I might be free. Today evening slightly it is becoming difficult. So if at all, but day after tomorrow it should be over is there in my mind also. We will keep progressing. Okay. We have sufficiently covered the assessment procedure. This is more than enough. With faceless assessment and faceless appeal, we will be 100%. For the 10 or 15 marks, this is more than enough.